Johnston, Democrat of Louisiana, and House Minority Leader Bob Michel of Illinois. This week, the two congressional leaders spoke to a meeting of the National Coal Association. And our schedule includes a congressional hearing on the Food and Drug Administration's enforcement powers. That's a brief look at our program schedule. Thanks for watching C-SPAN 2.
C-SPAN 2 proudly marks its 5th year telecasting live coverage of the U.S. Senate. C-SPAN 2 is part of the C-SPAN networks, privately funded to serve the public by America's cable television companies.
In July, after allegations that it was involved in money laundering and terrorist activities, regulators worldwide closed down the operations of the Bank of Credit and Commerce International, or BCCI. Today, on Capitol Hill, U.S. officials held the second in a series of investigative hearings into BCCI operations in this country. At a 4-hour House Banking Committee hearing, panel members heard from federal regulators about BCCI involvement in U.S. banks. Next on C-SPAN 2, we'll bring you complete coverage of today's Banking Committee hearing. Our coverage includes the testimony of William Taylor, Staff Director of the Federal Reserve's Division of Bank Supervision, and Robert Black, President of the Federal Reserve Bank of Richmond. The chairman of the House Banking Committee is Representative Henry Gonzalez, Democrat of Texas. The committee's ranking Republican member is Congressman Chalmers Wiley of Ohio.
And expeditious as it's humanly possible to be. Members are on their way, at least those who have indicated, including Mr. Wiley, who has indicated that he would be here today instead of his usual return to his Ohio district. So I'll take double advantage here and enlarge a little bit on the preliminaries, the introductory remarks that members in a setting such as this usually begin with. I wanted to thank the witnesses, the officials, Federal Reserve for responding to the committee's invitation and joining us this morning. I would like to start out by giving a little bit of personal history that should reflect the personal involvement of myself. Historically, the first attempt of Congress to address the question of international banking laws in the United States was 1978, but actually that became possible and responded only to hearings that I had insisted, and after much pleading, finally convinced the chairman of the committee at that time, Mr. Royce, and the subcommittee chairman, my predecessor chairman of the full committee, Mr. St. Germain, to come down to my district in San Antonio and have a hearing in the name of the Subcommittee on Financial Institutions. I was chairman, and for 10 years was chairman of the Subcommittee on International Finance. This is something that, you know, it's a personal history. Nobody's much aware of it or gives a hoot, or I don't see why they should. But in any event, I had information both from banking sources, savings and loan sources in Texas, of occurrences involving daily very heavy transactions cross-border. An individual in the northern state of Coahuila would get in his Cessna, load the plane with maybe bags of money, maybe something else, come into Texas. Nobody would be aware of it. There was no requirement of any information being given at the time. And the problem stemmed from the fact that these individuals began to get involved in the financial institutions of the state of Texas, S&Ls chartered by the state, one in particular, south of my district, in the township of Carrizo Springs. So in '75, we had those hearings. And in fact, we had 2 days of hearings. And the testimony and the documentation adduced during the course of those hearings really was impressive, to the point where the committee then, the banking committee, subsequent to that, had hearings on the matter on a more generalized level. The Carrizo Springs S&L, for instance, was one of the first that failed because of insider dealing. And if anybody wants to see the history of that, we have the hearings, the printed hearings. We may still have some copies. But in any event, that's my continuing and sustained interest since that period of time. We kept pushing, and it wasn't until '78 that finally a very, very watered down, lobbied down bill was passed known as the International Banking Law. Subsequent to that, there wasn't a year that I didn't push the chairman to improve, to perfect, because in effect, not much had been done to really provide the American people, even with a minimal degree of protection similar to every other single industrialized country. Even to this day, we don't. So the rest is history, but I thought I'd mention that because I don't want anybody to think that I'm here because we want to go out here and regurgitate who done it, why wasn't it done, and who was to blame. I don't think that is what should be before this committee. As I said day before yesterday in the case of the witnesses we had then, first, we're not an investigatory or a prosecutorial body. Secondly, we're not a judicial body. I'm not interested in saying, well, we've done enough of that. We pointed out, and I think the printed record in and out of the main line media, as well as the industry press, has clearly indicated that there have been regulatory failures. The B&L banking situation, which we went into and which didn't generate too much interest, I think is far more of an insidious case than BCCI. And it clearly revealed, because the Federal Reserve Board and its staffs agreed that we did need additional legislation. The main purpose in mind being to provide the regulators with the instruments of power that would enable them to adequately supervise, regulate, and oversee this now tremendous volume of asset money in this country, which has a tremendous high leverage potential, and in ways that actually I don't think anybody in this room or outside of this room can tell us, either on the state level or federal level, exactly how or what manner, shape, or form that money is being channeled. So that at this point, we want to get from you, and we will try to target the questions in such a manner as to elicit a commitment to, with the utmost urgency and priority, the need to perfect even the amendments we have in H.R. 6. It's obvious that something is needed here. My formal prepared statement, I think I still have about 2 minutes.
All right with me, Mr. Chairman.
If there's no objection. I don't think I've reached my 5 minutes, have I? Well, the staff doesn't have to answer that. Well, the BCCI question, which is the immediate triggering factor that brings us together this morning, of course, comes against the backdrop of unprecedented financial and regulatory failures and turmoil in our financial markets. It's not just the United States. There's not a country in the industrial world that isn't going through the same thing. Japan is undergoing scandals and whatnot, stock market tragedies. In Europe, we have a similar situation. So it isn't isolated to the United States. However, I think the United States has a higher degree of responsibility at this particular time. The United States is undergoing what I would consider a moral and a financial earthquake. And it's going to take the goodwill and the wit and the willingness of everyone. I've said this repeatedly. On the public level, the private level, the executive level, for us to address these problems in a orderly, systematic, and dispassionate way. And if we get into this question of, well, who to blame and get off on these sidetracks, I think we won't be actually serving the purposes for which we've been elected, and that is to serve the people and their interests, the greatest interest of the greatest number. Now, we've seen the thrift industry virtually wiped out. In my district, there's not one S&L, and we had what we thought was an absolute bedrock institution, one of the very few mutual institutions chartered by the state that seemed just absolutely impregnable. They've all gone under. There's not a one in my district that hasn't been taken over. Now that's tragic. You have some of the most illustrious families of the area affected, and it's tragic and not to be deplored, but there's no use wringing our hands. The point right now is, what should we be doing as a matter of priority, first, second, third, and down the line? We can recite here, and I think the record shows that there's been enough dereliction around on every level, congressional, private level, accounting level, banking, S&L, credit union, name it, if that's what we want to dwell on, but I don't think we should. So I ask unanimous consent that I place the prepared text of my opening remarks at this point in the record and recognize Mr. Wiley.
Thank you very much, Mr. Chairman, and I would again like to commend you for holding these hearings. I noticed an article in the paper this morning involving Southwest Savings and Loan Association, which is very disconcerting. It would seem that the problem goes on, and when we get through with BCCI with our hearings, if we ever do, we may want to have a hearing on Southwest Savings and Loan. So it looks like we have plenty of work for us ahead. But appreciate the diligence which you have demonstrated and the persistence you have shown in trying to get to the bottom of some of these problems. And especially this morning, we're glad to have these hearings. I'm glad you're having these hearings so that we might obtain information as to the Bank of Credit and Commerce International, how it was able to gain a foothold in this country as far back as 1982 through the purchase of Financial General Bank shares. Renamed as First American Bank, it proved to be a valuable asset for BCCI that allowed the BCCI group to engage in correspondent banking, move funds, and tap First American for liquidity purposes when necessary. BCCI was also able to obtain state licenses to open a number of representative offices and agencies where money laundering was rampant. I think it is fair to say that our regulatory system has been compromised. That being said, I think it is worth noting how the total liabilities of the BCCI scandal work out in the various countries. Out of the estimated $17.8 billion in total liabilities worldwide, $3 billion are in the United Kingdom, $4 to $5 billion are in the Arab countries, $1 billion are in Spain, and a total of 23 million is the maximum expected loss in the United States. But I know that our witnesses will testify to that and talk a little bit more about that. 1 billion in BCCI assets has already been seized to cover our losses. So it would appear that the U.S. taxpayer will not take a hit here, and that may be the good news coming out of this. These figures seem to indicate just how effective our regulatory system has been in preventing outright fraud in the United States. To help us unravel the regulatory origins of BCCI in this country, we have the witnesses here today from the Federal Reserve System, and I'd like to thank them and their staff for the complete cooperation we have received in preparation for this phase of the hearing. There are a number of questions involving the Federal Reserve's role that are still unanswered. Why did the Federal Reserve approve the 1982 application for a financial general when it would seem that information was available indicating some of the investors might be shady characters? How did Clark Clifford influence the board decisions, if he did? The contrived naivety of Clifford and Altman 2 days ago only confirmed my suspicions that they knew from the beginning what role BCCI would play. We need to know why it took so long for the Fed to close BCCI down. Rather, did the Fed act timely when they ultimately obtained the proof from overseas as to BCCI's activity, and how did it ultimately discover the loans from BCCI to Clifford and Altman? I feel these are questions and others that need to be answered this morning. I also think it would be desirable, as the chairman pointed out, just what we need to put in H.R. 6 additionally in the way of supervision over foreign banks. As the chairman mentioned, he and I have put a bill in. I think this is an area that needs probably improved coordination of the regulatory agencies with central bankers and regulators in other countries. And I look forward to hearing your testimony this morning. Thank you very much, Mr. Chairman.
Thank you, Mr. Wiley. Mr. Annunzio?
Thank you, Mr. Chairman, and I join the other members of the committee in extending our congratulations to you for your continued efforts, your hard work, pursuing and trying to get to the bottom of the biggest scandal in American history. Like so many hearings that the Banking Committee and the Financial Institutions Subcommittee has held over the past 3 years, this hearing examines the actions of our financial institution regulators. Like many of the previous hearings, this one will consider whether federal bank regulators did their job. And like in so many of those hearings, Mr. Chairman, I think that we will conclude that supervision was inadequate. By now, this should be no surprise to the members of this committee. We have seen how the decade of the 80s was one marked by deregulation and relaxed supervision. The administration and its bank regulators made no secret of their fate in deregulation. The regulatory environment did not encourage aggressive investigation. Time and time again, we have seen how troubling information would become known to the bank regulators, and they would take no action. Examiners would identify the shortcomings of numerous banks headed for failure, but take little or no action to stop them. In that regard, Mr. Chairman, BCCI is just one more example of how deregulation and lax supervision in the 80s have led to some of the most spectacular financial scandals in American history. Okay.
Thank you. Thank you, Mr. Annunzio. Mr. Leach?
Well, thank you, Mr. Chairman. I just want to make a couple comments about perspective. I agree with everything the distinguished subcommittee chairman just commented upon, but I think the perspective ought to be a little wider than that. It's not exactly a 1980 Republican regulator scandal. What we really have here is Republican regulator gullibility about Democratic Party conflicts of interest. And if there is a partisan accountability, it's Republican misfeasance and Democratic malfeasance. But I just want to stress that, you know, the policeman may have not been on the beat, but the conflict of interest is at the root of the problem. and that to a degree, we've had inducements to bad acting whenever you have inadequate regulation or inadequate legislation that sets the framework for regulation. But by the same token, you can hardly turn a scandal that relates to certain people into a scandal that relates to other people. And one ought to be very careful about attempting to do that. Thank you, Mr. Chairman.
Mr. Leach, you remember San Francisco hearing, January the 13th, 1989, I pointed out that corruption is bipartisan.
Well, I think the distinguished ranking member made that point when he called quite rightfully for hearings today on a problem with a thrift that may involve a Republican office holder, and I think on behalf of the minority, I would say that such hearings would be appropriate, and I would hope they would be held in conjunction with a serious effort by this committee to get to the bottom of the Centrust problem, which is something that this committee has to date not very adequately addressed. Thank you, Mr. Chairman.
Several other areas. I can mention several institutions that we haven't gone into, but we don't, that doesn't mean we're not at the first available opportunity. But what I'm saying is that you get into this bramble patch of having one party all of the swans and the other party all of the ducks is going to actually it'll result into a rather bisexual affair.
Mr.
You're
Chairman,
going to have a duck swan there.
I want to make it clear that you stand above the swans and the ducks, and that bird. Everyone is a bird of a feather in American politics, except perhaps yourself. Thank you.
Well, thank you very much, Mr. Hubbard.
Thank you, Mr. Chairman. I won't try to add to that dialogue. I do commend you, Mr. Chairman, for holding this series of hearings on the Bank of Credit and Commerce International. Yes, BCCI has engaged in a long list of alleged wrongdoings. If these allegations are true, then BCCI is perhaps the greatest international outlaw in financial history. Today, Federal Reserve officials will tell us they did everything they could to investigate BCCI. Pardon me. This claim notwithstanding, there are a number of troubling questions about just how vigorous these efforts were. First, our committee has received documentation showing that as early as 1988, the U.S. Justice Department officials were informed that BCCI owned First American. I have before me a transcript of a September 1988 conversation between Mr. Amjad Awan, an officer of BCCI, who was later convicted of money laundering, with a conversation between him and a federal undercover agent, in which Mr. Amjad Awan states that BCCI owns First American Bank. Well, the obvious question at this point is, was this information ever passed on to the appropriate federal officials? And if so, why didn't it produce any results? Secondly, in 1988, a special international regulatory panel known as the College of Supervisors was established by several countries with the purpose of monitoring BCCI's worldwide operations. Indeed, this international panel discovered valuable evidence of BCCI's ownership of First American as early as 1988. Yet, because the Federal Reserve decided against joining this panel, they did not discover this evidence until much later. Question again, why did the Federal Reserve refuse to join the College of Supervisors, especially since it admits that its own enforcement staff was too small and underfunded to take on this enormous investigation single-handedly? Lastly, there are reports that even when Federal Reserve officials discovered a Price Waterhouse report revealing key links between BCCI and First American, they, quote, refrain from taking a copy of the Price Waterhouse report lest the New York District Attorney's Office subpoenas such records, unquote. Those are the words of a memo written by one of the Federal Reserve's own officials, Thomas McQueenie. Why were agency turf battles more important than getting to the bottom of the BCCI scandal? We've been provided an excellent article that appeared in the Wall Street Journal on September 6. Headline, "Revolving Door Between Fed and First American May Help Explain Failure to Detect BCCI's Role." It was written by Peter Truwell. It goes on to say that even Alan Greenspan, when a member of the Federal Reserve, abstained from voting when it came to the notorious Bank of Credit and Commerce International. Just a couple of sentences from this article. Mr. Greenspan's recusal avoided a potential conflict of interest if there was only a small one. But there are many other meaningful links between the Fed, BCCI, and First American. Individually, none of the relationships may be all that significant, but taken together, they show that the Fed and First American were very much part of the revolving door Washington, in which it's sometimes difficult to distinguish between the regulators and the regulated. In closing, I would state that on Wednesday, just 2 days ago, Clark Clifford and Robert Altman testified before this committee. The headline on page 1 of yesterday's Washington Post, quote, "Our consciences are clear," unquote. In light of the questions I've just raised, I wonder if regulatory officials can make the same claim. I welcome today's witnesses and look forward to hearing their testimony.
Mr. Hancock.
Mr. Chairman, I frankly think we're into an area here that is going to have ramifications that maybe we can't even envision right now. The comments that were made pertaining to the getting into the partisan situation, the fact that corruption is bipartisan. When I look at the list of witnesses and I look at the list of the people here, I wonder if we're not getting into a situation of extreme corruption on the part of frankly, of a particular profession. And I'm very concerned about it. I notice that, frankly, that almost everybody listed here, everybody that's been interviewed, everybody that's the regulators from the Fed and what have you, are from one profession. And that concerns me, Mr. Chairman, and I think that's something that maybe we ought to look at. Maybe the Vice President had a lot of justification in the comments he made recently down in Atlanta. Thank you, Mr. Chairman.
Yes, sir. Thank you. Mr. Kennedy.
Thank you, Mr. Chairman. Mr. Chairman, I want to again congratulate you on holding this hearing, and I want to thank you for your willingness to take on, as you have time and time again, the most controversial issues that confront the banking community. We've heard many reports going back and forth over the course of the last few years, allegations of particular federal regulators not being willing to take on some of the tough responsibilities that are involved with their jobs. I think they have provided much evidence that perhaps people on this side of the aisle were not as vigilant as possible in terms of performing our jobs. But the reality, I think, that we're confronting here today doesn't just deal with the individuals that are before us. The fact is that there are a number of other federal agencies that are involved in this scandal. Those federal agencies, I think, most particularly the Central Intelligence Agencies, understanding of what was taking place with regard to BCCI going back many, many years, and their potential involvement in either getting the Fed to back off certain investigations, getting the Department of Justice to potentially back off in certain situations, is really, I think, at the heart of what we ought to be investigating. It's one thing to have, as we've seen in the allegations in the newspaper today that are then responded to by specific regulators as having an excuse where the T's are crossed and the I's are dotted. But if, in fact, underneath those excuses, if, in fact, underneath these cozy relationships, there was an orchestrated manipulation by an agency of this government that required individuals who were attempting to do their job properly to back off in order to avoid embarrassment. That, it seems to me, is the hidden dirty secret that I think we should get at, and I think is the ultimate responsibility of this committee. So I look forward to questioning the witnesses before the committee here today. I feel, Mr. Chairman, that depending on the responses that we get today, it might be well worth our while to extend these hearings and question other agencies of the government in terms of their specific involvement in this case. Thank you, Mr. Chairman.
Thank you, Mr. Kennedy. Mr. Johnson.
Thank you, Mr. Chairman. I want to thank you again, Mr. Gonzalez, for having these hearings. I think they're most important to the country. You know, I find it hard to believe that so many branches of BCCI or its American subsidiaries were allowed in this country, and contrary to retrenchment on the part of most U.S. banking, BCCI was expansionist. You know, I fail to understand why some of our regulatory agencies couldn't see that, why they couldn't see the money flow in both directions. And I wonder, since I see plush new facilities being built by the Federal Reserve in Texas and other states, it makes me wonder if the Fed is at all cognizant of their role as a protector, their responsibility to the American people. And I hope, and I'm sure, and thanks to you, Mr. Gonzalez of Texas, that we can maybe figure out what our past mistakes are and learn from them and get our banking problems behind us and get on down the road. Thank you,
Thank
sir.
you very much. Is that new facility in Dallas, Mr. Johnson?
Sir, yes, sir.
Is it in your district?
I'm not sure.
Uh-oh.
I think it must be in a Democrat area.
All right. Mr. Hoagland.
Well, thank you, Mr. Chairman, and thank you for organizing these hearings. I just would like, I think, to put an oar in the water on behalf of the Fed. You know, I think we have to be awfully careful about rushing to judgment on issues of this complexity before all the evidence is in. And I think we have to remember that we're never going to have perfect regulation in America. The best we can hope for is good regulation. And I think by and large the Fed within its sector of responsibility provides good regulation. I have read the statement that has been prepared by Mr. Mattingly and Mr. Taylor and Mr. Corrigan, and I must say that taking that statement at face value, and I'm sure we can with gentlemen of their integrity, frankly, I'm quite impressed with the activities of the Fed before the full scale of fraudulent activities became generally known. For instance, 4 of the 6 agencies of BCCI in America were closed by January of '91. The representative offices were closed by August of '90. Again, well before this international coalition of regulators fully understood the depth of the fraud. And BCCI's operations in America had shrunk from $1 billion to $250 million. Now, another way of looking at all these facts is that that's really pretty impressive. And it's left the BIF and the American taxpayers with virtually no loss, as I understand it. And I think this can be viewed really as a compliment to the Fed and the fact that they perform better than any of the other regulatory agencies in any of the other countries. Now, again, no regulation is going to be perfect, but, you know, in the face of intentional criminal activities by extraordinarily clever individuals setting up a structure first in Luxembourg and then elsewhere where there's a minimum of regulation, hired, I'm sure, as our colleagues from Missouri and Texas have pointed out, by some of the very best attorneys in the world, there's really only so much that regulators can be expected to do. And I'm not saying they're free of fault. I mean, any job could have been done better. But I think we have to be careful about holding our regulators, who are very well-intentioned and by and large very competent, to impossibly high standards. But anyway, there are many additional facts that I'm sure will come out. But again, I think you've got to say that in many respects they did a pretty darn good job in this case in protecting the United States. Thank you, Mr. Chairman.
Thank you. Mr. Moran?
Thank you, Mr. Chairman. I have a long list of good, sexy questions, as I'm sure my colleagues do, related to criminal activity, issues that perplex the members of the committee as much as they do the American people. We want to know why the CIA didn't do a better job of sharing the information, pursuing the information they had available, why the Justice Department would accept a $15 million fine from a multi-billion-dollar bank and give up their right to prosecute for a long list of alleged criminal activity. But we are not in the role of a jury. Our purpose is not that of a prosecutor or a trial lawyer. Our purpose is here to investigate what transpired for the purpose of ensuring that it doesn't repeat itself, to understand the past so that we can promote improved public policy and perhaps pass legislation that might address a lack of communication, coordination, or more aggressive pursuit of wrongdoing. So that is the context that I know these hearings, in which these hearings will take place, and we're very anxious to hear how you feel that the system can be improved so that we don't have this string of embarrassing information coming out in magazines and newspapers day after day. I agree with Mr. Hoagland that the Federal Reserve is a very responsible agency with top-flight professional personnel, and perhaps that's why the Federal Reserve is targeted for so much scrutiny, because we expect such high standards. And in some ways we think, well, if those various agencies couldn't do their job, at least we should have been able to rely upon the Federal Reserve. I think that is the context in which we will be asking further questions related to your testimony, and very anxious to hear from you how you think these problems might have been prevented and how we can ensure that they not recur. Thank you, Mr. Chairman.
Mr. Sanders?
Thank you, Mr. Chairman. Apologize for jumping in and out, but there's a meeting upstairs being sponsored by the National Organization of Women, which is suggesting perhaps the need for a third political party, something dear to my heart, so I'm running up and down.
They had their entire caucus there, didn't they? Showed up. I'm sorry, I shouldn't have said that. It wasn't meant to
Well, the entire caucus, Jim, within this building, we feel we have many millions of people outside of the building.
I know you do.
Seems to be the problem with American politics.
Excuse me for taking your time. Sorry.
Mr. Chairman, I thank you for bringing forth this important meeting and bringing these gentlemen before us. And with your permission, I'd like to submit for the record a statement, but I want to divert a little bit.
Without objection, your statement as prepared will be on the record.
Mr. Chairman, I know that you share the feelings of many Americans that something is not right in the American banking system today. And while I think this hearing is very important in trying for us to understand how BCCI could have gotten influence and where were our regulators and so forth and so on, I think the problem runs, in fact, a lot deeper than that. Let's just stop for a moment and look at what has been happening in this country in the last several years. We start with the savings and loan situation where a significant number of the leading bankers in the S&L industry were involved not just in stupid investments, not just with greedy actions, but in outright illegal activity. I've heard estimates running as high as 35% of the institutions that failed were involved in illegal activity. And then, as you know, Mr. Chairman, we then proceed to deal with the commercial banks. And what we hear there about the greed in which these people have taken their depositors' money, invested in quick, get-rich real estate schemes. They have invested in third world dictatorships. They have passed money around to each other, and now the taxpayers will be asked to spend tens and tens of billions of dollars passing out, trying to bail out those institutions. And then yesterday, 2 days ago, we heard from Mr. Clifford, Mr. Altman, about the BCCI, and we'll be continuing that discussion today. And I have to tell you, Mr. Chairman, that I have the sad feeling that several months from now, we will be sitting in this room hearing again about another banking scandal. I myself do not have confidence that the federal government at this point is capable of regulating the banking industry. I think we need radical changes in the relationship of banks to America, because while the bankers are engaging in selfish, greedy activities, at the same time, the standard of living of our people is declining because banks are not reinvesting in the United States of America. And I think what we have to be clear and begin to discuss is what is the function of the banking institutions in this country. Why are we not reinvesting in our factories, in our farms, in our small businesses, creating the kinds of jobs that we should be creating? 2 days ago, whether it was not illegal, the question that I asked of Mr. Altman and Mr. Clifford was, what goes on, even if everything they said was honest, and many of us doubt that, what goes on when two leading American bankers, multimillionaires, pillars of the establishment, are taking huge sums of money from Middle Eastern potentates, including third world dictators? That's who the leader of Abu Dhabi is. He's a third world dictator, and these guys are working for them. So I would suggest, Mr. Chairman, that maybe at some point in the future we've got to change the focus of this, because every 2 months it's going to happen again. The American people do not have faith in the leadership of the banking system, and for good reason. We're sick and tired of bailing out to the tunes of tens and tens of billions of dollars these criminals. And when we talk about the crime problem, I know the President of the United States is very concerned about crime in America. Well, I got news for you. We are seeing the major swindles, the major criminal activities do not necessarily take place on dark alleys and in streets. They take place in corporate boardrooms. So I think we have got to be thinking, perhaps, Mr. Chairman, a little bit more radically in terms of the responsibility of the banking community to the people of the United States. And I applaud you for holding this hearing, but I hope in the future we'll get a little bit deeper into that issue. I thank you.
Thank you, sir. Gentlemen, the committee is proceeding under Rule 10 and 11, I might add, of the rules of the House as an investigatory, in an investigatory capacity. So I will ask you to please stand and raise your right hand. Do you solemnly swear or affirm that the testimony you're about to give this committee is the truth, the whole truth, and nothing but the truth, so help you God? I do. Thank you, John. Now, I will accept the suggestion as to the order of presentation as you requested, and recognize Mr. Mattingly first.
Thank you very much, Mr. Chairman. I and my colleagues from the Federal Reserve are pleased to appear today before the committee to discuss the Fed's supervision of BCCI and our continuing investigation of its secret acquisition of several U.S. banks. Mr. Chairman, we have a story to tell of persistence, dedication, and courage on the part of the Federal Reserve in getting to the bottom of this BCCI fraud, and we appreciate the opportunity you've given us to tell that story. I will concentrate on 5 major points that we believe should be stressed. First, the Federal Reserve has never approved any presence by BCCI in this country. For that reason, BCCI has never been authorized to take deposits, a single dollar of deposits, from U.S. citizens through any insured bank. Our investigation indicates that BCCI was well aware that the Fed presented a serious obstacle to its desire to acquire U.S. banks. Instead, in the 1980s, BCCI opened 6 agencies and several representative offices in the United States with the approval of state authorities. The Fed has recommended legislation, which the chairman and this committee have endorsed, that would require federal review before a foreign bank can establish any office in the United States. This case shows that we need tough national standards to prevent thinly capitalized, poorly managed, and most importantly, inadequately supervised foreign banks from operating in this country. We must also make sure that foreign banks cannot hide fraud and deceit behind bank secrecy laws. They should not be permitted to enter the United States unless the regulators are assured of full and timely access to the information that we need to enforce this nation's laws. Chairman Gonzalez has noted at the opening that this is a matter of some urgency, and we at the Fed wholeheartedly share his view. The second point, in 1987 and 1988, our examinations detected money laundering and operational problems at these state-licensed agencies. Despite concerns expressed by other regulators here and abroad, the Fed took strong enforcement action against BCCI, issuing a cease and desist order to correct serious deficiencies and prevent future money laundering. When BCCI pled guilty to money laundering in 1990, compliance with the Fed's order was made a condition of its probation by the court at the urging of the U.S. Attorney in Tampa. Through the action of the Fed and state regulators, BCCI's agencies were shrunk by about 75% during this time period. By the time of its seizure on July 5th, BCCI had closed down 4 of its agencies, shut its rep offices, and its U.S. operations had been squeezed down from $1 billion to $250 million. Most importantly, there were less than $25 million in liabilities to third parties. Thus, at the time of the closing, the vast majority of funds at its 2 remaining agencies were its own. They were not those of U.S. depositors or citizens. Third, the Fed did act to prevent an illegal BCCI presence in this country in 1980 when Middle Eastern investors applied to acquire First American. Although the Fed did not have evidence at that time of fraud or illegality in BCCI's overseas operations, we were concerned by BCCI's unregulated status and rapid growth. The Fed received explicit commitments from the investors and their representatives that the acquisition was being made with the investors' own funds and that BCCI would not acquire shares or finance the investors. These representations are unmistakable and unmistakably clear in our view. The Fed, however, did not rely on representations alone. The Fed made substantial efforts to verify what it was being told. The Fed asked the investors to supply financial statements and other documentation which confirmed the various representations. The materials submitted by banks and by accounting firms indicated that the principal investors were multimillionaires, fully able to make the investment using their own funds and without borrowing from BCCI or anyone else. The Fed went on to conduct background investigations of these investors. The Departments of State and Commerce were consulted with and stated that these persons were of substance and that they knew of no reason the investors should not be associated with a U.S. bank. The CIA was consulted and reported no adverse information on the investors. Finally, the Fed took the unusual step of holding a hearing at which 4 investors, including the largest, and the investors' lawyers, were called in. They further denied any BCCI involvement in financing the investment. It's important to note the Federal Reserve is not authorized to deny an application on suspicion or rumor, or even because it wants to. Under the law, we must have evidence. The Fed had no grounds for denial and therefore gave its approval in August of 1981. Fourth, since allegations of an illegal BCCI First American link reached the Fed in late 1988, the Fed has investigated the relationship between the two, detecting and producing, in our view, hard evidence of violations by BCCI and others of the Bank Holding Company Act and other banking statutes. The first allegation came to the Fed in late 1988. Based on my discussions with those involved, we know that in September 1988, an IRS agent sought assistance from a Federal Reserve official in connection with an undercover operation regarding BCCI's money laundering in Florida. The IRS agent told the official that any leak could jeopardize lives and compromise the investigation, and therefore the agent did not provide the Fed with a lot of information. The Fed official mentioned to the agent that BCCI was an issue for the Fed and that if the Fed had the evidence, it would expel BCCI from the country. During one of the series of calls on the money laundering, the IRS agent told the Fed official that during the undercover operation, a banker had alleged that BCCI owned First American. According to the agent, the Fed official requested the evidence but was not given the name of the witness because the information was not public. The Richmond Reserve Bank received a similar report from the press. According to the IRS agent again, on December 27, 1988, there was a call to the Fed official in which the agent asked, hypothetically speaking, whether a case could be made to expel BCCI if he could provide the names of 5 or 6 former BCCI officials who would testify that a high-level BCCI official stated at a meeting that BCCI owned First American. The agent states the Fed official responded that documentary evidence would be needed. Federal Reserve trained investigators have subsequently interviewed this witness, referred to by the IRS. He was one of the BCCI employees indicted and convicted for money laundering. The witness stated he had no first-hand knowledge of BCCI ownership, and his statement during the undercover operation was based on, quote, corporate gossip within BCCI. The witness has provided no support for our case. In January 1989, shortly after the information we received from the IRS, the Fed followed up on the allegations with a review by the Richmond Reserve Bank of First American's relationship with BCCI. The Richmond Bank questioned First American management and requested that information be obtained from the CEO of each of the First American banks on any financial dealings between BCCI and the First American banks. The Reserve Bank found no evidence of irregularity. In addition, the IRS agent states that he was contacted at this time by the Fed official in connection with a then pending acquisition at the board. The Fed official asked whether the agent had any information that would assist the board on the application. The agent, according to the agent says, quote, I don't have anything, close quote, believing the Fed was interested in documentary evidence because of the previous telephone call he'd had with the Fed official on the hypothetical. The Fed did not let the matter drop. In 1989, and again in 1990, the Fed continued to seek information from law enforcement agencies we knew were probing BCCI. In June 1989, while the U.S. Attorney's Office in Tampa was investigating BCCI, a Fed official met with attorneys from that office in Tampa and stated our desire to obtain information that they obtained on the investigation when complete. On February 7th, 1990, 2 days after BCCI was sentenced for money laundering, the Fed sent 2 experienced Fed lawyers to Tampa for the express purpose of determining whether the U.S. Attorney's investigation had unearthed any evidence that BCCI owned First American. The U.S. Attorney's Office referred our investigators to the IRS, including the agent who had talked to the Fed official earlier in '88 and '89. The IRS indicated that a report of their investigative findings had been prepared. The Fed requested the report of the U.S. Attorney. It was not provided, we were told, because of grand jury secrecy and witness confidentiality considerations. For similar reasons, the Fed was not told of investigative tapes or given copies of transcripts. The investigators were told by the IRS of the existence of an informant whose credibility the IRS told our people they seriously doubted. And of another lead. The Fed was subsequently given the name of the informant, but was unsuccessful in repeated efforts to contact this person until 1991. Again, the Fed did not let the matter drop there. In further efforts to obtain information on the allegation of control, the Fed, in the summer of 1990, pursued another avenue of the investigation. We reached an information sharing agreement with the New York County District Attorney, Mr. Robert Morgenthau, that allowed our investigators access to materials he had compiled in a grand jury investigating BCCI. Mr. Chairman, this agreement and the ongoing cooperation and collaboration between the Fed and the New York County DA were to be of great benefit to both in uncovering what Mr. Morgenthau has aptly described as the largest banking fraud in history. In the fall of 1990, the Fed, acting on a tip provided by the DA, demanded, and after initial refusals by Price Waterhouse, was eventually able to review in London at BCCI's offices a Price Waterhouse report. The report confirmed the existence of over $1 billion in loans by BCCI secured by the shares of First American's parent holding company. The bank, BCCI's CEO, told a Fed official at that time that the loans were non-performing. They'd never received any payment on the loans. The Fed demanded and eventually obtained the critically important backup files on those loans showing that the borrowers were nominees for BCCI and that the loans were sham. The Fed also at that time immediately initiated examinations of the entire First American banking organization, focusing on determining whether there were any financial dealings with BCCI or abuse of those banks for BCCI's benefit. Mr. Chairman, the Fed's investigation has been intense and thorough. This has not been an easy exercise for the Fed. It has consumed an enormous amount of resources and required dedicated effort and courage by our staff investigators. It has encompassed seizure and review of tens of thousands of pages of documents, both here and in Europe and the Middle East. Weeks of depositions, interviews of more than 50 different persons in the United States and overseas, and cooperation and consultation with federal, state, and foreign law enforcement agencies. We believe the results, however, are well worth our effort, and we are proud of those results. The evidence unearthed by our staff establishes the nature and extent of numerous violations of banking law in the United States, the methods by which the violations were planned, engineered, and implemented, and the nature and whereabouts of the evidence establishing those violations. The quality of our evidence is evident from the notice of charges that we issued on July 29th and the boxes of investigatory materials that this committee has subpoenaed from the board, including the evidence of loan arrangements between BCCI and the nominees that are the heart of our case. In that notice and one other, the Fed has assessed a civil money penalty of $200 million against BCCI and initiated actions to bar 9 individuals associated with BCCI from any further involvement with U.S. banks. At the request of the U.S. Attorney, we have deferred temporarily assessments of substantial penalties against these individuals. We are not through. Our investigation is continuing. Because many issues remain to be resolved by the board and hearings conducted, our ability to answer questions about the evidence or our views of the evidence will be limited, lest we say something that would prejudice those proceedings and prevent us from proceeding with our enforcement actions. Fifth and finally, in assessing the BCCI matter, it is important to keep in mind that this is a case of systematic and deliberate criminal fraud. BCCI took maximum advantage of an unsupervised, corporate structure to conceal and warehouse in bank secrecy jurisdictions overseas hundreds of millions of dollars in fraudulent transactions. Although our bank examination powers allowed the Fed to detect poor operating controls and money laundering at the U.S. agencies, more intensive and extensive investigation efforts were required to uncover BCCI's ownership of stock. However, using the authorities available to it, the Fed continued to investigate the matter both here and abroad, and we now know that BCCI's top management was seriously concerned with the supervisory initiatives of the Federal Reserve. Our persistence, however, paid off, and we uncovered the truth. The Federal Reserve recognizes that the best way to deter the kind of fraud that occurred at BCCI is through criminal punishment that sends a loud and clear message to would-be offenders. Throughout our investigation of BCCI, we have made criminal referrals whenever we discovered illegal activity and have shared with criminal investigators at the federal level and the state level the evidence and investigative leads that we have gathered, as well as our expertise and knowledge of this complex BCCI case. We believe that this will be vital to any prosecution of BCCI and others involved in BCCI's illegal activities in the United States. We are greatly encouraged by the indictments secured by the New York County DA and the United States Attorney in Tampa, and are continuing to work with the DA and Justice in pursuing the BCCI fraud. Mr. Taylor will now describe the Fed's supervision of BCCI agencies.
Mr. Mattingly, yours as well as the other gentleman's testimony that was submitted to us and prepared, yours was very extensive, will be presented for the record at this point following your oral testimony.
Thank you.
In its entirety. Mr. Taylor.
Thank you, Mr. Chairman. Mr. Mattingly said that I will describe the Fed's supervision of BCCI, but I think he has just done so quite eloquently. I think if I could save the committee's time so it would allow maximum time for questions, I would just make a few remarks.
Sure.
One is to say that from the beginning, as Virgil has indicated, we did not consider BCCI to be qualified to own a bank or to take deposits from the general public in this country. They did enter through state-licensed agencies. The states are the primary supervisors of these agencies. We are the residual supervisors of those agencies. That in no way relinquishes or diminishes our responsibility to see that these agencies conduct their business in a proper way in this country. And so we accept full responsibility, despite the fact we are the residual supervisor, and of course it's something we seek to correct in legislation. Now, I would add that as far as the record goes, in 1987 we found indications of criminal activity at BCCI, and we reported it promptly. After comprehensive exams immediately subsequent to the raid in Tampa, we took formal steps to coordinate nationwide with our state colleagues a full and complete examination of BCCI's activities in the United States, and immediately subsequent to that began to order them to wind down their operations with the eventual end of seeing them leave the country. We acted promptly to coordinate and cooperate with foreign authorities when they came to the conclusion that the activities of BCCI were indeed such that the organization could not continue. We worked with them very closely to assure that markets and international clearing mechanisms were not disturbed. After years of looking for connections between BCCI and First American, we were finally able to secure documentary evidence necessary to bring charges against BCCI for illegal control of the shares of First American. We have also taken steps to completely separate BCCI from First American. All of us at the Federal Reserve wish we had been able to do so earlier. All of us see the need to have better communication with other agencies of the government and better information flows among international supervisors. But in the end, the cooperation of the states, our colleagues at the OCC and the FDIC, and our law enforcement agencies, and indeed foreign regulators, we did it. We put our people at risk. We are the ones who charged BCCI we are the ones who stopped their operations in their country, in this country, and assisted in the orderly shutdown around the world. Liabilities and to depositors and creditors around the world totals $20 billion, a very unfortunate circumstance for many. BCCI's liabilities in this country are less than $25 million. Are we satisfied? Certainly not. More needs to be looked at. Improvements need to be made. Are we finished? No. Our investigation continues, and we have additional evidence to take, and as soon as we find evidence, we will take additional action. Fortunately, in this country, we are required to follow due process. We are required to respect the rights of individuals, and we are not able to prosecute people for rumor. But by God, when we have evidence, we will do so, and we have done so. Nominee arrangements are tough to find in Lubbock, much less Luxembourg or London. Can we prevent it in the future? Fraud and concealment. Nominee arrangements are always difficult to detect, but with your help we can deter it by passing the suggested legislation and by seeing that when criminal practice is discovered, that we take strong measures to punish so that those who might think of it in the future might pause. The legislation that we have proposed and this committee has so generously supported says that the Federal Reserve shall approve entry into this country by foreign banking organizations, and it says that no entry shall occur unless that banking organization has consolidated supervision at home. And finally, it provides for expulsion, indeed, if the company does not operate in a legal and sensible fashion in this country. We need, as Virgil has indicated, more focus, I think, in the banking regulation business on criminal activity. We need to beef up our investigative resources. There's just no question about that. The bulk of our activity to date has been with relation to safety and soundness. And I think the events that keep occurring indicate to us a strong need to find a better way and more resources into the investigative side of this business. We, in this process, do not wish to abridge the rights of anyone, nor do we wish to endorse anyone. And the investigation continues, and as we find more, we will do more. Thank you, Mr. Chairman.
Thank you, Mr. Taylor. Mr. Black.
Mr. Chairman, I too have a formal written statement, and with your permission, I would like to enter that into the record.
Certainly, without objection, it's ordered.
Well, I have a few brief remarks in which I would like to outline the role that the Federal Reserve Bank of Richmond played in the case of BCCI's ownership of First American Bank shares. First American Bank shares had subsidiary banks in 5 states. The largest volume of deposits were held in Virginia, and under the Bank Holding Company Act, this provides that the Federal Reserve Bank that supervises the banks in the state of Virginia would be the primary supervisors. And since this is the Richmond Reserve Bank, it fell our job to do the primary supervision of First American Bank shares through our regular inspection process. When this application to acquire First Financial General Bank shares surfaced, as First American was then known, in 1988, we shared the concerns of the rest of the system and the other regulatory agencies regarding the possible ownership and control by BCCI. We participated in the hearing of the application, and we were assured by the current and future role of the BCCI would be that of only an investment advisor to the owners. Despite our misgivings, we saw no legal basis for denying the application, and we recommended to the board that it be approved. Since the company was acquired in 1982, Federal Reserve Bank of Richmond has conducted 8 inspections of that holding company. On each occasion, the examiners have reviewed the company's records, remaining fully aware of the system's concern about possible control by BCCI. And while the Federal Reserve does not have primary responsibility for the supervision of any of these subsidiary banks, since none are state member banks, We reviewed the reports of examination conducted by the Office of the Controller of the Currency, Federal Deposit Insurance Corporation, and the various state banking authorities. In no instance, none whatsoever, were there adverse comments about ownership or evidence of transactions with BCCI other than in the ordinary course of business. Examinations and inspections over the years have indicated compliance with the commitments made by the investors to the Federal Reserve at the time of the original application. Following BCCI's indictment for money laundering in the Florida offices and the surfacing of allegations of BCCI control in late 1988, Richmond Reserve Bank conducted a very thorough inquiry in early 1989 into the relationship of BCCI and First American. We reviewed the business relationships of the subsidiary banks. We interviewed the senior officers of First American, and they again stated that BCCI did not own or control First American. Again, despite a very exhaustive examination by one of our most senior bank holding company inspection officers, we found nothing that suggested in the records that BCCI owned or controlled First American. Now, late in 1990, the system received the first tangible documentary evidence of the existence of the loans to the shadow owners of CCAH stock, the holding company of First American, when a board staff member was permitted to go to the Bank of England and read the report of BCCI's external auditors there on premises without bringing back a copy of that report. Since that time, the Federal Reserve Bank of Richmond has participated in a comprehensive, coordinated inspection of the holding company and examinations of the subsidiary banks at the same time. Our bank has had the role of directing the activities of a group of examiners. I might say that there were 52 of these from all 12 Federal Reserve banks. They had an average experience of about 8 years, and this investigation has thus far consumed about 7 man-years of time. It has been very thorough. And in delving into these records, we have found no evidence of influence and control or any indications that the banks were involved in any attempt on the part of covert owners to influence others. This investigation is ongoing, but preliminary findings have disclosed no abuse of the banks or significant exposure on the part of First American to BCCI. Since the issuance of the Board of Governors' cease and desist orders against CCAH and BCCI in early 1991, the Federal Reserve Bank of Richmond has sought to ensure that First American's exposure to BCCI, which consisted of letters of credit and certain clearing balances at the New York subsidiary bank of First American, be wound down and liquidated in an orderly process. As a result, when BCCI's offices were closed on July 5th of this year, First American's exposure had been reduced to a very modest amount, and that is to be liquidated by the end of this year. Like many other financial institutions in and around Washington, First American has experienced significant losses on commercial real estate loans. The Federal Reserve System has worked with Middle Eastern investors who owned First American through CCAH to obtain additional capital funds as added protection to depositors. And during this period of time, since First American was acquired by these Middle Eastern investors, over $500 million of capital has been injected into the company, $112 million of which has been added since December of last year. They have recently sold their subsidiary bank in the state of Tennessee, and the proceeds of that are also going to be downstreamed, at least in part, to the individual banks that are subsidiaries of First American. So from a balance sheet perspective, the investors have served as a source of strength. They have taken no dividends during any period of this time, and we can find no evidence of any significant exposure to BCCI. Nevertheless, we are continuing to monitor the organization very carefully and to work very closely with the board staff. And I add parenthetically here that in the case of examining, we work more closely with the board staff than we do in the execution of our other responsibilities, since from a statutory standpoint, the Board of Governors really has the supervisory responsibility and in a sense delegates that to the reserve banks in part, whereas in the case of some of our other duties, we have full statutory responsibility for performing those. So we'll work with the Board of Governors staff as we've done and with other regulatory authorities to ensure that the companies remain on a sound basis and the control by BCCI is divested as soon as practicable. And I'll be glad to respond if I can, Mr. Chairman, any questions you or members of the committee may have.
Thank you, Mr. Black. Mr. Barstow?
Thank you, Mr. Chairman. Members of the committee, in accordance with the request contained in your letter of invitation, I am very pleased to appear today to discuss with you the role of the Federal Reserve Bank of Atlanta in the supervision of the Florida offices of the Bank of Credit and Commerce International, BCCI, and in the supervision of NBG Financial Corporation, which was the parent holding company of the National Bank of Georgia, which in turn was the predecessor of the First American Bank of Georgia. Mr. Chairman, as with the others, I have a full text which I would request be placed in the record.
Certainly, without objection, so ordered.
I will attempt to shorten it by reading excerpts from that testimony. Mr. Chairman, my remarks will first address BCCI. Since the previous witnesses have set forth the supervisory and regulatory framework within which the Federal Reserve System operates with respect to its supervision of international branches and agencies, I'm going to confine my remarks regarding BCCI to the Atlanta Reserve Bank's supervision and regulation of BCCI's offices in Miami, in Boca Raton, and in Tampa, Florida. Just to set the record completely clear, the BCCI Miami agency opened in March of 1982. The Boca Raton agency opened in September of 1983, and the Tampa agency opened in June of 1984. Each of these offices, Mr. Chairman, was licensed by the Comptroller's Office of the Department of Banking and Finance of the state of Florida. The Miami agency managed and coordinated the activities of the Tampa and Boca Raton offices, including regulatory reporting to the Federal Reserve. From the time of its opening, the BCCI Miami office, from the time of that opening, the Atlanta Reserve Bank carried out its supervisory responsibilities pursuant to the International Banking Act of 1978. And as was the case with other Florida agencies under that act, our responsibility as the residual supervisor of the state-licensed agencies was essentially to assure that the BCCI Florida offices received timely examinations from the licensing authority, the state of Florida. During this time, our examiners participated in these examinations in a limited manner. Our participation normally consisted of a 1- or 2-day visitation of the agency in which we conducted a review of financial reports submitted to the Reserve Bank and a review of compliance with federal banking laws, including, of course, the Bank Secrecy Act. Irregularities in compliance, as well as technical violations, were detected at various times during our visitations and resulted in 2 criminal referrals, which I'll describe in greater detail in a moment. In 1983, the Treasury Department referred numerous institutions, including BCCI Miami, to our attention after finding technical difficulties in their reporting of transactions subject to the Financial Record-Keeping Act. The deficiencies basically concerned improper completion of forms designed to report individual cash transactions of $10,000 or more. We found additional technical compliance problems at BCCI Miami in a visit in 1984 in which examiners noted the agency had failed to file currency transaction forms for 3 cash transactions over $10,000. The agency filed the forms during the examination, before the examination was concluded. Both cases, in our judgment, represented isolated technical problems and did not raise suspicions of money laundering. In each instance, agency management took corrective action. In March 1985, while visiting during the state's examination, Reserve Bank examiners detected suspicious transactions carried out by a customer of BCCI Miami. After becoming aware of the transactions, the agency ceased doing business with the customer. And to our knowledge, this customer has not been implicated in subsequent indictments of BCCI. Following the receipt in August of 1985 of the state's March examination, which noted continued asset problems, the Atlanta Reserve Bank conducted an independent examination of the Miami office in October 1985. This examination revealed a significant deterioration in asset quality. However, no further evidence of suspicious transactions was noted at that time. While participating in an April 1987 examination of BCCI Miami, our examiners discovered possible money laundering transactions that appeared to be structured to evade the reporting requirements of the law. The transactions were detected in a review of checks and money orders sent from BCCI Panama to BCCI Miami for payment. And those details, Mr. Chairman, are in the statement and can be furnished later, but in the interest of time, I'll not go into the nitty-gritty of those transactions. A criminal referral concerning the activities discovered at the Miami agency was filed with the U.S. Attorney's Office in Miami and with the Federal Bureau of Investigation in North Miami Beach on May the 18th, 1987. In October 1988, as you know, the U.S. Attorney in Tampa issued indictments against BCCI and several employees for money laundering. In connection with the indictments, U.S. Customs agents searched the offices of BCCI in Florida over the weekend of October the 8th. Reserve Bank examiners, Atlanta Reserve Bank examiners, entered the Miami, Boca Raton, and Tampa agencies to monitor liquidity and to review operations in the week following the search by law enforcement officials, and in fact remained on site for several weeks until the situation stabilized. Our efforts in Atlanta were part of a system review of all of BCCI's U.S. offices. During this period, activities resulting in the Atlanta Reserve Bank's second criminal referral were discovered. Federal Reserve examiners detected 2 separate series of suspicious transactions while on site at BCCI Boca Raton, and both of these cases were quite similar to the scheme that we had detected in Miami in 1987. The second criminal referral, again, was filed on November 7, 1988 with the U.S. attorneys in Tampa and Miami and with the FBI. Those reports were subsequently furnished by the Board of Governors to the Internal Revenue Service. As a result of the systems review of BCCI's U.S. operations in 1988, a cease and desist order against BCCI was issued by the Board of Governors on June the 12th, 1989, requiring BCCI to strengthen U.S. operations and enforcing compliance with the Bank Secrecy Act. The Reserve Bank again conducted an independent examination of BCCI Miami in September of 1989 to assess the condition of the agency and determine compliance with the board's order. This examination was coordinated with other Reserve Banks' examination of the U.S. offices of BCCI. Our examiners noted significant asset quality problems and weaknesses in credit administration, internal controls, and the audit function. The need for further examination of BCCI's Florida offices was eliminated when the Tampa and Boca Raton offices closed in September of 1989 and the Miami agency closed in January of 1991. Now, Mr. Chairman, if I may, I'd like to turn to the Reserve Bank's supervision of the National Bank of Georgia, or more accurately, to the holding company that supervised that national bank. Mr. Gaith Farone a Saudi Arabian national, acquired a 60% interest in the National Bank of Georgia in 1978 and continued to acquire stock in that bank until by the end of December 1980 he owned 98.6% of total outstanding shares. Because National Bank of Georgia was a national bank, the comptroller of the currency, OCC, was its primary regulator. Mr. Ferrone's banking interest first came under the jurisdiction of the Atlanta Reserve Bank in July 1981 when a bank holding company which Mr. Ferrone owned filed an application to become a bank holding company by acquiring an existing bank holding company and its bank subsidiary in a county in Georgia. This was not, I should interject, not NBG at that time. The Reserve Bank approved the application for this acquisition of a holding company in October 1981 based on the following factors. First, the positive impact of Mr. Ferrone's ownership on his existing banking interests, as evidenced by the OCC's recognition of the improved condition of NBG and Ferrone's injection of $3 million to improve its capital. And secondly, Mr. Ferrone's ability to repay debt associated with the acquisition and provide continued support to the holding company. Mr. Ferrone's financial statement showed a net worth in excess of $100 million, not including the bulk of his assets, which were in Saudi Arabia. Pursuant to the application, this holding company acquired the bank and thus became subject to the Reserve Bank's supervision. The Federal Reserve Bank of Atlanta's supervision and regulation responsibility for the parent holding company of NBG began in November 1981 when Mr. Ferrone filed applications to place his stock in NBG under his existing holding company, then called GRP, and to acquire 2 more banks in Georgia. In evaluating the applications, the Atlanta Reserve Bank again considered reports of examination issued by NBG's primary supervisor, the Office of Comptroller of the Currency, which indicated that NBG had improved under Ferrone's ownership, and again reviewed Ferrone's ability to financially support the bank by requesting a summary of sources of his most recent year's income and a list of his annual obligations. Ferrone again provided evidence of a non-Saudi net worth in excess of $100 million and committed to make an additional capital injection of $10 million into NBG. The Board of Governors of the Federal Reserve approved the application in March of 1982, and the parent holding company of NBG therefore came under the Federal Reserve's supervision. The OCC, of course, continued to remain as the primary regulator of NBG, the bank, while the Reserve Bank directly supervised the parent holding company. Now, Mr. Chairman, in response to committee's specific question, let me state that during this entire period, there was no information or evidence to indicate that Mr. Ferrone was not, in fact, the owner of NBG, or that his sources of funds for acquisitions differed from that which he reported. Mr. Ferrone had been the owner of record of NBG for several years prior to the formation of the holding company, and he had established a satisfactory record during his control of the bank, as evidenced by the improvement in condition of the bank, his ability to make capital injections, and his ability to defer dividends. With respect to our inspection and supervision, let me just say a few words. The activities and financial condition of NBG's parent holding company were monitored by the Federal Reserve Bank of Atlanta through inspections of the parent holding company, NBG Financial Corporation, as well as examinations of some subsidiary organizations. The bank holding company supervision program focuses on assessing the condition of the bank holding company and determining its ability to serve as a source of strength to its subsidiaries. The Atlanta Reserve Bank inspected NBG's holding company once each year from 1983 through 1986. Each inspection considered the ability of the bank holding company to support its bank subsidiaries and found the contribution of the sole indirect shareholder, Mr. Gaith Ferrone, to be positive. Never in the course of our supervision of the parent holding company, including reviews of the examination reports of the primary regulator, the OCC, did the Atlanta Reserve Bank discover any information indicating BCCI's ownership of NBG Financial Corporation. In keeping with the regulatory structure prescribed in the Bank Holding Company Act and the International Bank of 1978, the Reserve Bank has maintained regular contact with the state of Florida and with the comptroller of the currency in its routine supervision of BCCI and NBG's parent holding company, relying as directed by statute on the reports of these other supervisory agencies whenever possible. When concerns regarding the condition of BCCI's Florida agencies arose, the Atlanta Reserve Bank departed from its usual residual supervision and conducted an independent examination to directly assess BCCI's condition. The Reserve Bank continues to participate in coordinated investigations of BCCI and related parties within the Federal Reserve System, and it is also continuing to cooperate with law enforcement agencies in their ongoing investigations of BCCI and NBG. In summary, Mr. Chairman, the Federal Reserve Bank of Atlanta supervised BCCI's and NBG's activities in our district as directed by the International Banking Act of '78 and the Bank Holding Company Act. We did make criminal referrals of suspicious activity and increased our on-site presence as warranted. With respect to NBG, later First American, we evaluated on several occasions the owner of record, Mr. Ferron, and had every reason to believe that he was a person of substance financially and that he was acting on his own behalf. Throughout this period, we have cooperated with law enforcement agencies in every way possible, and even at the present time are contributing an examiner to the U.S. Attorney's ongoing efforts in Atlanta. Thank you, Mr. Chairman.
Thank you, sir. Mr. Thompson.
Thank you, Mr. Chairman. I, too, have a statement to be entered into the record.
Certainly, without objection, every statement that had been given to us in writing, and we wanted to thank you for that because we've examined them, will be in the record as you give to us.
Thank you. I will attempt to summarize my testimony, and I will focus on the most important aspects of the Federal Reserve Bank of San Francisco's role in the supervision regulation of BCCI and in the regulation of Independence Bank in Encino, California. BCCI's presence in the 12th District began in September 1981 when one of its subsidiaries opened an agency in San Francisco licensed by the state of California. This agency was converted into a direct office of BCCI in June 1985. In February 1983, BCCI established an agency office in Los Angeles. Our Reserve Bank and the California State Banking Department shared examination responsibilities for both agencies under the provisions of the International Banking Act of 1978. Our oversight efforts intensified after notification of BCCI indictments in October of 1988 in Tampa, Florida. Our Reserve Bank conducted special examinations of both the Los Angeles and San Francisco agencies in conjunction with investigation of BCCI's money laundering activities. These examinations focused on a review of the agency's policies and procedures to ensure compliance with the Bank Secrecy Act and a review of currency transactions that had occurred within the preceding year. No evidence warranting the filing of a criminal referral was discovered at either agency. However, based partially on our findings, our examiners participated in drafting a memorandum of understanding which was issued to BCCI by the California State Banking Department on February the 14th, 1989, and a cease and desist order which was issued to BCCI by the Federal Reserve Board on June 12, 1989. The indictments and enforcement actions increased BCCI's cost and contributed to the decision by BCCI to close the San Francisco office. These assets, together with those in the Miami office, were transferred to the Los Angeles office in December 1990. In February 1991, in response to the Federal Reserve Board staff coordinated supervisory efforts, we examined the Los Angeles agency. Particular attention was paid to testing compliance with state and federal laws and regulations, including the Bank Secrecy Act. This examination, like other recent examinations, disclosed weakness in asset quality, internal controls, and management supervision. On July 5, 1991, the state of California closed the Los Angeles office in conjunction with coordinated closure of BCCI offices worldwide. Our examiners have remained on site at the Los Angeles office since the start of February 19, 1991 examination. They are continuing to review the agency's records and share relevant information with the appropriate federal and state judicial authorities, other regulators, and Congress. Turning now to Independence Bank, it is a state-chartered non-member bank and is not owned by a bank holding company. Accordingly, the FDIC and the California State Banking Department are its primary regulators and supervisors, and were responsible for reviewing its acquisition by Gaith Ferrone in November of '85. We have not examined Independence Bank or participated in examinations by the California State Banking Department or the FDIC. Our relationship has been essentially limited to an application in 1986 to form a bank holding company. In response to both the draft and final applications, we voiced significant concerns related to the proposed high debt level and low consolidated capital ratios, and requested a number of commitments. Apparently, our discussion with the applicant and our request for commitments discouraged the applicant from proceeding, for the applicant failed to provide either the commitments or necessary information to complete the application. On December 5, 1986, we returned the application to the applicant, and no further action was taken. In summary, our efforts to determine the ownership of Independence Bank were limited, as we had no direct supervisory or regulatory role with the bank other than its application in 1946 to form a bank holding company. The application never reached the stage at which the system would have investigated and formed conclusions about the management and ownership structure of Independence Bank. The Reserve Bank's supervision and regulation of BCCI was concentrated on our inside examination program adopted with the cooperation of the State of California Banking Department. Our role in drafting enforcement actions issued against BCCI, our intensified oversight efforts in light of money laundering indictments in 1988, and our continuous on-site presence commencing with the examination of the Los Angeles agency in February of 1991. That on-site presence exists until today. Thank you.
Thank you, Mr. Thompson, very much. Mr. Corrigan.
Thank you, Mr. Chairman. Giving a statement at this hour gives me a little bit of a feeling that the whole world is a tuxedo and I'm a brown shoe, but let me try anyway to proceed. For starters, let me say that beginning at the time of the October 1988 indictment of BCCI in Tampa and continuing to this day, the Federal Reserve Bank of New York has been intimately involved in virtually every aspect of the Federal Reserve's investigation into BCCI. Over the past 12 to 15 months, I personally have been significantly involved in the investigation, often on a daily basis. My involvement has entailed frequent consultations with my own staff, with Misters Mattingly and Taylor, with Chairman Greenspan, with senior regulatory authorities from abroad, and from time to time with Robert Morgenthau, the New York County District Attorney. And here I want to emphasize something Mr. Mattingly said earlier, and that is how absolutely important and constructive our relationship with Mr. Morgenthau and his staff has been throughout this investigation. In that context, I also would like to pick up on one of Mr. Hubbard's earlier questions, and that has to do with the circumstances surrounding the Price Waterhouse report in December of 1990. We knew and we now know in spades, that BCCI was bound and determined to keep that Pricewaterhouse report in question away from any authorities in the United States of America. We went to enormous lengths to get the report. We were frustrated, but we did agree to send a Fed representative to London to review that report on the premises of BCCI. We wanted to know what was in it. We had agreed at the time that we would not take the report with us, but we did want to know what was in it. Within days of that occurring, a senior official of the Federal Reserve Bank of New York discussed in detail the results of that visit with Mr. Morgenthau and his staff. So in that context as well, the cooperation with Mr. Morgenthau was close and intimate. Let me also, Mr. Chairman, by way of trying to pull this together a bit, share with the committee a few of my own observations on the process, its results, and its implications for the future. For starters, it should be, and I think it is recognized, that the scope and complexity of this investigation, together with the unimaginable patterns of deceit, lies, misrepresentation, fraud, and criminality that had to be overcome in order to get hard evidence of wrongdoing is certainly unprecedented in my experience and probably in the 77-year history of the Fed. Indeed, the Fed's investigators were engaged successfully, I might add, in an investigation that would be considered very formidable by even the most sophisticated law enforcement authorities in the world. But as I like to point out, we got them. Now, having said that, it's only appropriate to ask why it took so long to produce the results that are now before us. Now, in part, the answer to that lies in the patterns of lies and deceit that we had to get through to get at the truth. And in that regard, let me again emphasize that there is no other governmental institution here or abroad that has had a greater or faster measure of success in getting at the truth than has the Fed, even though some of those institutions have considerably more experience and discovery power in this type of investigation than does the Fed. But even allowing for that, there are a couple of other things that I think should be important to the committee and indeed to the American public. First, we wanted to be absolutely sure that our efforts were always consistent with the dictates of due process. This is a nation of law. Rumors, allegations, unsupported accusations, and even claims made by informants or insiders do not constitute evidence of wrongdoing. Obtaining that hard evidence was an extraordinarily difficult task that would take the Fed's lead investigative personnel to locations throughout the United States, Europe, and the Middle East. It entailed those investigators taking thousands of pages of statements and depositions from individuals here and abroad, as well as reviewing tens and tens of thousands of pages of documents. Getting that evidence was not easy, but it was done. Second, from the earliest stages of the active investigation of the money laundering problems in 1987, we had to be very careful that our investigative efforts did not in any way compromise the efforts of others. Third, as the scope of the Fed's and other investigations widened, and as allegations of serious criminal activities on the part of BCCI began to emerge, we had to be concerned about protecting the confidentiality and well-being of witnesses. And in the latter stages of the investigation, Mr. Chairman, I must tell you, we, or at least I, was very mindful of the need to be sensitive to the well-being of the officials in the Federal Reserve who were conducting these investigations. And if I may say, Mr. Chairman, I think we all, and I'd probably go so far as to say the nation, owes a great debt of gratitude to the individuals who undertook that effort. I might also say that we were concerned throughout this about the possibility that documentary evidence so vital to our case might be destroyed. Finally, the possibility exists that there may have been information available to other official institutions that might have expedited the Fed's investigation had such information reached the Fed on a more timely basis. Taken together, these factors, especially in a setting of fraud and deceit, made the investigation frustratingly slow at times. And with the benefit of hindsight, there probably are some things that we might have done differently or done in a different order that might have saved some time. But even under optimal conditions, I believe firmly that any such time saved would be measured in months and not years. On the other hand, the experience gained from this investigation surely has influenced our attitudes regarding certain aspects of banking law and supervisory policies. Mr. Mattingly and Mr. Taylor have already touched on the legislative side of that. Let me not belabor that. But I do want to say that in the area of lessons learned, another area of great importance that has been brought into even sharper focus by the BCCI affair is the need to strengthen and further coordinate international bank supervisory programs and policies. As the committee members may know, in July of this year, I was named by the group of 10 central bank governors to the position of chairman of the Basel Committee on Banking Supervision. Last week, that committee had its first regularly scheduled meeting since I was designated its chairman, and at the meeting, not surprisingly, there was a lengthy discussion of the BCCI affair and the lessons to be learned from it. On the basis of that discussion, the committee hopes to have finished by its December meeting an issues paper that will focus on a number of things that are spelled out in detail in the joint statement that Mr. Taylor and Mr. Mattingly and I have provided to the committee. Without going into those details, my hope and expectation is that this issues paper will be finished for the committee in December, but I want to emphasize that that paper will not, at that point, contain recommendations. Rather, I have in mind that the discussion in December will help the committee to shape a follow-up paper with recommendations that would be considered in the first half of next year. In saying this, Mr. Chairman, I want to caution about expecting too much too soon. Getting 11 countries to agree on these complex matters that strike so close to legitimate issues of national prerogative, if not national sovereignty, will not be easy. I cannot, Mr. Chairman, in good conscience, leave the subject of international coordination of banking supervision without saying a brief word about what I know will be a sensitive subject. I and all members of the international community of banking supervisors deeply respect the prerogatives of legislative bodies, including their prerogatives to seek and obtain information. By the same token, it is vitally important that the manner in which that prerogative is exercised in a cross-border setting is fully sensitive to the laws and traditions of other countries. For if it is not, the necessary process of sharing supervisory information across national boundaries can be seriously impaired. In closing, Mr. Chairman, let me add one further point. In a nation of law and due process, no system of law and regulation can prevent crime or wrongdoing. That is one of the prices we choose to pay for the enormous benefits of a free and open society that places such a high premium on individual rights. However, preserving a free and open society implies that when transgressions occur, those responsible for administering laws and regulations must see to it that the parties who have violated law or regulation are found out and are punished. I would hope that the message growing out of the Fed's persistent, vigorous, and unrelenting investigation of the BCCI affair would be clear to all. And that message is that we will not tolerate this kind of behavior, no matter how formidable the obstacles put in the way of our efforts to get at the truth. Thank you, Mr. Chairman.
Thank you, sir. Well, let's see. With the exception of, I believe, Mr. Forrestal, who took about 15 minutes, and you, Mr. Corrigan, about 15 minutes. The others, with the exception of the lead witness, Mr. Mattingly, took just about 5 minutes, which I wanted to thank you for. But nobody was going to restrain you in your full and complete presentation as your own conscience dictated it. First, I want to refer to a matter that was printed in today's morning newspaper, that the Federal Reserve is a poor and underfunded government agency. I want to point out that the Federal Reserve has $25 billion to fund its operation if it wants to. There are no limits on the amount of money the Federal Reserve can spend on bank supervision. The Federal Reserve has never complained to Congress that it does not have adequate resources to supervise banks. The Federal Reserve decides on its own how much it will spend on supervision. If the Federal Reserve does not have sufficient resources to supervise banks, they have no one else to blame but yourselves. My question is, have any of you ever been told not to spend as much money as is needed to do a good job in supervising banks? Mr. Taylor?
Mr. Chairman, I'd be pleased to answer that. The answer to the question is very simple. No. We have not been limited. I might add to that we are an agency that pays very close attention to the expenses that we incur, because we are indeed spending the public's money. And so at the Federal Reserve, expense control is a very, very important item. I might add that your statement, the statement you just made, I will make very good use of in the 1992 budget negotiations, which start next week. And I greatly appreciate it, because it is important, and I do think we've had very good support from our board and our chairman, and I think that support will be continuing, but your statement will certainly help.
Then what you're saying is that today's statement in the newspaper has no relevance to the actual facts. That is, you're neither poor nor restricted in the amount of funds that, if you wish, you can devote to bank supervision. Assuming, that you're an economical, efficient, prudent, restrained spender. Now, we would never accuse you of being a spender. That is a profligate spender.
I think the record would show, and I always want more money.
Pardon?
I always want more money for supervision, but I think the record will show that over the last certainly 6 or 7 years, that the Federal Reserve Board has provided, and the Federal Reserve banks have provided, a pretty broad-based increase in the supervisory resources. Now, whether or not we can increase those resources in a meaningful way in relation to the way the problems have increased is something we continue to tackle.
Well, if there are limits, who imposes the limits?
No, I'm just saying the limits are imposed by the number of problems that have surfaced. The 80s have produced a tremendous number of banking problems, and to be able to staff adequately and quickly is difficult. I think all the agencies have had trouble. We have expanded our resources. It is our plan to continue to request more resources and to improve our capability to conduct these types of investigations.
As I listened closely, tentatively to your testimony, I think you amply demonstrated what some of us have been saying for some time, and that is that the regulatory system and the mishmash that exists in our country has long broken down. I mean, it's long outserved its use. We have a basic structure or chassis that was constructed, in one case, OCC, as far back as the Civil War. And in most of the other cases, the Depression period, pre-war. And our attempts to give that priority up to now have been frustrated. And in fact, one of the big failures of our banking bill was the fact that we weren't able to address the question of regulatory reform. Perhaps it was wise, because if there's going to be a restructuring of the activities in the financial world, we want to make sure we know to what extent they will be, and then afford the proper and sufficient regulatory environment. Now, the awesome aspect of this is that while we're here assembled this morning, we have somewhere between 750 and 800 billion dollars in this country of this kind of money. It's high leverage money. It can be leveraged in unbelievable ways. And corollary to that is a fact that still has not penetrated the level of consciousness that I thought we had tried to stress in the BNL case, the Banca Nacional. And that is that these activities, quote, foreign bank activities or foreign money, are really representative of government-owned entities, almost every one of them officials. And in those countries, the ruling families and the central banks are one and the same. And Mr. Corrigan, it was you who told us at one point or another, at least our staffers, that it was none of our business to try to find out how much and who Kuwaiti money was in this country or any other foreign bank. So, you know, you can't have it both ways. You can't say, look, in dealing with these other foreign governments, our problem is that the Congress doesn't provide, because it has access to information and these other entities don't. Well, you can't have it both ways. You can't then tell us that in our effort to assess the range, the velocity, the maneuverability, the leverage of these monies that can be used, as in the case of the Banca, for everything from agriculture credits to the purchase and through the use of German banks, French banks, other country banks, funds out of an agency bank in Georgia that ended up in procuring armament, chemical ingredients for warfare to Iraq. There's nobody here can say if Iraq, even at this moment, Saddam Hussein doesn't have a few $1 million around in our country. We don't know. This is the awesome thing. This is what we want to get at. Now, we're not going to get it here, Mr. Corrigan, by on the one hand saying, well, you know, we've said this, but the Congress, and trying to shift the blame over here. That's not acceptable. I think we're going to have to get away from that. Now, what I have noticed in the testimony today, for instance, I wanted to compliment you, Mr. Thompson. You pointed out how as early as 89, in the case of the San Francisco entity because you used the phrase inside investigative resources or procedure in conjunction with the Banking Commission of California. Now, in your case, Mr. Forrestal, you used the phrase system review, that you resorted to your system review to look into the case there of BCCI, as I recall. Now, what do you mean by system review? How does that differ from Mr. Thompson's definition of his method of approach?
I think we may be talking about two separate instances, Mr. Chairman. To back up to the very beginning, as I indicated in my statement, under the International Banking Act, the reserve banks are partners, as it were, with the states, but the states who license these foreign agencies are the primary regulators, and we, under the laws we interpreted, are residual examiners. Now, that would mean that we could sit back and simply take written reports from the state. However, in the case of the Atlanta Reserve Banks, we did, in fact, accompany the state examiners, and we were on site for a limited purpose to ensure compliance with Federal Reserve banking laws, and especially the Bank Secrecy Act, and in effect to oversee to some extent what the state was doing to ensure that the state was carrying on a full-scale and proper examination. Later on, after the indictments were made, there was a system effort where examiners from all over the many reserve banks involved conducted simultaneous examinations, and that was the system review that I was referring to. But in the case of the Atlanta Bank's examination of the Miami and the Boca Raton institution, we not only were in those institutions with the state authorities, cooperating with them, receiving their reports, making our own judgments on one or two occasions, at least one occasion, and perhaps two. We conducted our own examination because of evidence that we had that there was something amiss.
I realize that whether it's a Congress or any bureau or any agency or any corporate activity, there's an inertia there and a resistance to seems to be a criticism of the activities. In the case of the BNL, we discovered that. We discovered that because of the peculiar mishmash of regulatory oversight, neither the state banking commissions didn't have the resources. They could easily be pooled. But neither did the Fed, other than with the main Italian bank original headquarters in New York. But then when we would want to ascertain, there was a resistance. And first, the Justice Department had a letter from the Attorney General, who first wanted to talk to me privately. I don't do that. I'm just the chairman, and I can't speak for the committee privately or any way. So unless the whole committee was brought in, I wasn't going to meet with him. So he finally said, look, we would like for you to drop the committee's consideration and investigation of the BNL. Well, I had to remind him of the Constitution. You know, that sounds ironic. Attorney General be reminded of the Constitution and the proper line of authority and area. So, but we did. Then the next thing is when we asked the Fed would say, well, the Justice Department says we shouldn't because it may compromise their investigation. So we had to go through all of that. We met considerable resistance. It's my hope that in this case, and finally, though, I will say that finally the federal officials recognized that we did have to have some legal improvements. You recall that, Mr. Mattingly. And we finally did. But even at that, when we get here and we get to the discussion and the amendatory process of what we have said is pretty good model of what we should approach, then we get Treasury, and we get an argument between Treasury and the Fed. Treasury from the standpoint that there's an international question and reciprocity. In the case of one issue in this Yeah, the grandfathered banks. You'll recall that issue. Now, we need help here. We need to have some unified and consistent executive branch plus Federal Reserve. We know our limits. We're not trying to exceed them. We're not interested in criminal prosecution. We're not interested in trying to find who done it here, there, or there. That's not our business. But we are absolutely determined at this time and under this present watch to do everything that we should be doing, and in some cases should have been doing for 20 years, to shape up the statutory basis for the ability of the regulator to act with quick dispatch, with total freedom, and with no political interference. The other specifics, the article this morning bringing out this question that Mr. Hubbard referred to, I'm going to leave it to them. I consider those rabbits that are going out there, and I'm not going to chase every one of those rabbits. We'll do the same thing we did day before yesterday. Every time a rabbit was turned loose, of course you have skilled people like Mr. Altman and Mr. Clifford that could do it. But here's the awesome thing. Even at this point, and with the massive treasury of $45 million plus that BCCI was able to muster and Mr. Clifford orchestrate in that one case in Tampa, they got what? The Justice Department was in on it. They got a plea bargain. But there was a condition to the plea bargain. And the Justice Department committed itself, and it has not kept that commitment. And that was to follow through, and they haven't done it. So this committee then will have to go and summon forth and follow through on that, because even though we may have to sequentially refer that part of the penalty clauses to the Judiciary Committee, it looks like since nobody else is doing it, either the Judiciary or not, because the recent subcommittee of the Judiciary in its report didn't say anything. And it didn't get behind that. And why the torpor and the laxity in the follow-through of the Justice Department? These are things that affect us. Now, I'm delighted to accept the offer, Mr. Mattingly. Times are wasting. We've got to start as of day before yesterday to immediately address what we have to do now to change, modify, and strengthen the amendments that this committee has already approved in H.R. 6. And looking forward to that, we want to do it in a cooperative and in a spirit of goodwill. I hope that will be the case. Mr. Wiley.
Chairman, I certainly do agree with that last statement. And you referred to the article in the paper this morning, BCCI's stake in First American known in '88, and Mr. Corrigan alluded to this question. But in the paper it says that the Bank of England knew about BCCI's secret ownership of First American in 1988. When did the Bank of England inform the Fed about this revelation, and when did you first learn from the Bank of England the tie-in between BCCI and First American? Mr. Corrigan.
It would appear, based on a telephone conversation that I had with the Bank of England this morning, that the press report you're referring to may not be accurate. The indications I received this morning were that the first information of this sort that reached the Bank of England was a year later. It was late in 1990, not late in 1989. But that is a question that records will have to be looked at to make sure.
Mr. Wiley, if I
yes.
can, the report, the newspaper report you're talking about indicated that the Bank of England had Price Waterhouse reports from prior years 87, 88. We've turned those reports over to the committee, by the way. Those reports did indicate in a section that there were loans by BCCI to CCAH shareholders secured by the stock. That information was in Price Waterhouse reports for the period, certainly they were in the 88 and 89 reports. And to my knowledge, and I have checked this through every person I can at the Fed, information about those loans, the information about the loans was not transmitted to the Fed by the Bank of England until 1991.
Okay. Now, the article also mentioned that you were expected to argue that you did the best you could with a small, underfunded enforcement staff, and you didn't argue that. But it also says that the staff was lied to repeatedly going back to 1981. You didn't say that exactly either. You said there were some untruthful statements made. I think this maybe came in your testimony, Mr. Taylor. I'm not sure, but I'll ask anybody to answer. Were you lied to, when and by whom?
If I can, I would like to answer that. And again, we have, as you know, we have an ongoing enforcement proceeding that we've issued against BCCI and a number of other people, and the Fed still has in front of it the question whether to issue additional enforcement actions growing out of that application. So we have to be very careful what we say so as not to prejudice those ongoing proceedings. But to answer your question, the evidence that we have, the hard evidence that we've all talked about, indicates that, well, first, we were told there would be no loans by BCCI to finance those people's purchase of that stock. That is absolutely clear, and I don't think it's disputed by anybody. That is a fact. Second fact, we have...
By whom were you told that?
We were told that by we were told that in the official sworn application filed with the Fed, very clear. We were told that by the lawyers for these people. That would be Mr. Altman and
filed the application.
Mr. Altman and Mr. Altman and Mr. Clifford.
Okay.
We were told it in the hearing. We were told that in the hearing.
Yes, of course.
Well, that's what I don't understand, though, Mr. Mattingly. Now, of course, you know, you had this memorandum from Mr. McQueen, and he's saying, hey, look, we ought to get these guys and bring them before us. Well, apparently y'all did. But then Mr. Clifford comes in his majestic grandeur, and everybody sits there dazzled. And in this case, you're asking Mr. Altman, did you do it? Well, what's he going to say? It's like asking the bank robber, did you rob the bank? He's not going to say he did. I mean, what I don't catch is, given the background of this and the fact that you had these memos, inter-office memos and all, why Clifford and Altman weren't pursued a little bit harder? Thank you.
That's a good question, and I think it does lead into what we need to know, given the testimony of Mr. Clifford and Mr. Altman here on Wednesday. Could you please tell us the series of events that led up to the finding that BCCI had given Clifford and Altman millions of dollars to buy CCAH stock? Mr. Taylor?
Before Virgil answers that, because he's the one I think that could best answer it, I think it's important to establish what kind of proof we needed to have a strong enough indication that the commitments that we were given were violated. We had to establish in documentary fashion that indeed the investors borrowed money from BCCI to effect the original transaction. And so it's not a case of establishing that they borrowed from BCCI. There was no commitment not to borrow from BCCI. There was no commitment not to borrow from BCCI secured by the stock of CCAH if indeed the proceeds of the loans were used for some other purpose. We had to establish in this very tight requirement that they borrowed money for the purpose of effecting the acquisition of CCAH. Is that correct, Virgil?
That's correct. And I was going to say that the evidence that we have uncovered, the evidence we've reviewed, and we believe it suggests that from the very beginning, BCCI was lending to these investors to purchase the stock. That is what the evidence that we have reviewed indicates. We have provided that evidence to the committee.
I want to put this in the best context possible here now. Were you surprised when you discovered that Clifford and Altman bought stock with BCCI loans?
Yes, I believe I was the first person at the Fed that received that information, and I was surprised, yes.
Now, how did you find it out?
After we got the confirmation, we went to London and we got the confirmation in the report that there were loans. Within 10 days, the lawyers for BCCI came in to have a meeting with me. And at that meeting...
Lawyers for BCCI?
These are the lawyers...
Clifford and Altman?
By this time, BCCI has hired another law firm.
Okay.
This would be Patton Boggs' law firm. And, excuse me? What date? Okay, this would have been on December 21st, I'll never forget it. They came in and they...
4 days before Christmas.
4 days before Christmas. They came in, they handed me the official list of the alleged owners of First American. And they went down the list and they pointed out to me every one of those people who had borrowed money. The loans totaled $1.3 billion. They told me the loans were non-performing, that no interest had ever been received on the loans. You can imagine what I said. Now, Mr. Clifford and Mr. Altman's names were on that list. All right. But there wasn't any indication at that time that the BCCI had lent them money. I asked them, I want the loan files. In very early January, they came back to me. This is the Patton Boggs lawyers for BCCI. They gave me a document. I believe the document is dated January 10th. It's a bunch of schedules of all these 15 investors, and it shows that over the course of years, BCCI lent money to each of these investors to buy First American stock. I thumbed through the schedule. I got to the end. There were two sheets. One was for Mr. Altman and one was for Mr. Clifford, and the schedule showed BCCI loans to those two individuals. That is the first indication anybody at the Fed had of loans by BCCI to those two individuals.
What you're telling us, in effect, is that, one, you had to go 4,000 miles after all this correspondence and meetings and everything to find this information. Is that right?
I'm telling you that, yes, it was. We got the information through the lawyers for the BCCI people and the schedules that I had demanded. When I saw that there were loans there, one of the first subpoenas the Fed issued was to Mr. Altman and to Mr. Clifford, and we subpoenaed every document that they had on those loans. We got the documents back in January in response to our subpoena. The documents show there's a side letter between Mr. Altman and BCCI, which indicates that the loans, there was no obligation on their part to repay the loans or the principal.
Now, did Clifford and Altman ever give you this information?
Yes, in response to the subpoena, they gave us the information.
And is that when knowledge of the so-called Ryback letters came to your attention?
No, I knew of the Ryback letters before that. I mean, at about this time, remember, the investigation was just really blossoming. I reviewed the files, and at that time, I saw that in late '89, Mr. Ryback had written to Mr. Altman saying, "Give me everything you have on any loans by BCCI, directly or indirectly, for the purchase of First American stock."
Well, you said a little earlier that you were the first, the Fed was the first to blow the whistle on this whole operation in effect. Am I interpreting what you said, or Mr. Corrigan said that, I guess. Am I interpreting correctly what you said there?
I think it is correct. The suggestion that I was making is, and I think the specific reference that you're referring to, as I said in my statement, that no official institution that I know of here or abroad has gotten more and gotten it faster in this whole thing than the Federal Reserve, and I think that's right.
The witness, if you would yield a brief question on to clarify one of the answers that he gave. Is that possible?
What's that, Mr. Kennedy?
I just wanted to check with the witness on a brief question to clarify one of the answers that he gave. Would you mind? Thank you. Mr. Taylor, when you were indicating the standard that you had to reach in order to be able to move forward, were you suggesting that if, in fact, BCCI had financed the acquisition by the several Mideastern investors, that in and of itself creates no violation of federal rules?
No, it does. That if they finance the acquisition of CCH shares, that is a violation.
And so your difficulty was only in establishing that?
That was one of the difficulties, to establish that that was what the money was advanced for.
Okay, thank you. Thank you, Mr. Chairman.
One more question, Mr. Chairman. You've been very generous, which I appreciate. Should Mr. Altman have disclosed his loans after the revelations in the Ryback letters?
I can't comment on that. That's a matter that the Federal Reserve is looking at in connection with their ongoing investigation, and I really don't want to prejudice what the Fed is going to do or not going to do on that question.
Well, was the Ryback letter plain on its face?
The Ryback letter speaks for itself. It is in the record.
Thank you, Mr. Chairman. That's fine.
Thank you, Mr. Chairman. I appreciate the time, and I want to get the tension off by saying that I want to welcome Bill Taylor to the committee this morning. His family is from my congressional district. And Mr. Taylor has been nominated to head the FDIC. I wanted to know that you have my complete support, and I hope that the Senate will move rapidly to confirm you before we run out of BIF money.
Thank you, Mr. Annunziata.
Mr. Mattingly, on Wednesday, Mr. Altman testified that First America used BCCI to communicate with the various shareholders of First American around the world. He indicated that many of these shareholders were hard to reach, and BCCI knew how to get in touch with them. Now, my question is this: why would people included, it is my understanding, an investor who was only 12 years old at that time, suddenly decide to invest in First America Bank? What was so interesting to these far-flung investors that attracted First America? Were they giving away toasters or other items?
I think that at that particular time in history, they were awash in dollars. Remember, that's when the oil price was sky high, and there were these huge amounts of petrodollars that had to be invested. And I'm speculating here, but it seems to me like a lot of those dollars were being funneled through BCCI for investment.
To me, I just can't understand. There's so many other banks. Why was all of a sudden First America become so popular, that everybody wanted to invest in First America?
I wished I knew the answer to that.
Well, that's something we have.
I think we do.
I think you know the answer, and I think we know the answer. Now, Section 12 of my bill, H.R. 26, the Money Laundering Amendments of 1991, requires the Treasury, in consultation with the Federal Reserve, to adopt a rule requiring financial institutions to keep records of wire transfers. If these records had been kept for the past 5 years, would regulators be better able to judge whether or not First America engaged in money laundering? Mr. Mattingly or Mr. Taylor?
I don't think so, Mr. Annunziata. In this particular case, we have a tremendous amount of information on their money laundering activities that were developed through various federal, state, and law enforcement investigations. I also don't think that information on wire transfers would have helped us at all in trying to get to the bottom of this stock ownership question.
But when they were getting back to money laundering, which I'm deeply interested in, they worked out a consent decree for $14 million?
14 million, I think.
$14 million, which they paid.
Yes.
They paid that fine for laundering money. That's just a small tap on the wrist when you consider what money laundering is doing to this country, to the big cities of America. It's destroying the young people of the fabric of this country. And in that legislation, we worked out an understanding where I was accused of being too tough, too restrictive. So we put a little amendment in the legislation where we said that before a license can be revoked or a charter can be revoked, there must be a hearing before the Federal Reserve Board, and they would make the determination. And I agreed to that amendment because a half a loaf is better than none, you see. The point that I'm making is that the House, on 2 separate occasions, has passed this legislation by a vote of 406 to 0. And it's still pending in the Senate, where it has never passed. How do you feel about that legislation? I know the Federal Reserve apparently has approved it, but I get the feeling that if we had legislation of this type on the statute books, instead of a $20 million fine, which is a slap on the wrist, that if a hearing was held, that it was found that they were guilty, and we would dry up the supply of the money of these people. That's how you dry it up. They're using American dollars. They go in and they launder this money, they get American dollars back, and they use it to perpetuate their industry, their trade.
We at the Federal Reserve very much agree with that, and we fully support the bill that would give the authorities, the Federal Reserve and others, the authorities to expel foreign banks from this country for money laundering and other illegal and improper activities.
Well, I'm very happy to hear you say that. If there's some way you can convey that to the Senate, because we could have avoided a lot of these hearings, a lot of the activity that's going on, if the charter had been lifted of this First American Bank for indulging in that kind of activity. And that's the kind of laws we need. We don't have to pamper these people. These people don't need the sympathy of anybody. They're destroying, I come from the city of Chicago, so I know what I'm talking about. They're destroying my city. They're destroying Mr. Corrigan, New York. They've already destroyed 3/4 of Washington. That's the drug dealers. And the only way to get them out of business is to cut their legs off, and the way you cut their legs off is to cut their money out. Thank you, Mr. Chairman.
Thank you. Mr. Leach.
Well, thank you. Let me piggyback slightly on again, the distinguished chairman of the subcommittee, and that is to welcome Mr. Taylor. He might have ties to Illinois, but actually he's Iowa educated and an Iowa wrestler. And that is dual bad news for the money launderers of the world. Now, I'd like to ask Mr. Mattingly, sir, you mentioned something that's a new bit of information to the committee that I think is of profound significance. You said that the loans to Mr. Altman and Mr. Clifford, on the record, they had no obligation to pay back interest or principal. That, in effect, made them gifts from BCCI, which would belie the circumstance by which their description was that BCCI was an advisor to the investors. Now, in effect, when they were paid back, they were only part were sold at a rather extraordinary profit, and so they kept part of their original amount of stock that was given by BCCI as their own, and then they sold the rest at a profit and received cash compensation, all of which originated with BCCI. Now, would you not say that that pretty well destroys an argument that BCCI was an abstract neutral advisor to so-called investors, and would pretty well underscore the presumption that BCCI was the owner of the institution, or the controlling owner of the institution?
Congressman Leach, I don't want to be evasive, but again, that is the very issue that the Federal Reserve is faced with having to decide at this time. I'm going to have to provide advice on that very issue to the board, and I would respectfully request that it would not be appropriate for me to answer that question at this time.
I appreciate that. Let me then raise one comment you made earlier, and it's the only comment I have some doubt about. At least the judgment at which you reflected. At the very end of your opening testimony, you mentioned that at the request of the U.S. Attorney, the Federal Reserve Board was not putting any more fines on these institutions. Is that request in writing?
Yes, it is.
And can you supply that to the committee?
I can. I would like to explain that.
I wish you would, because let me just make it clear. We have lots of requests from U.S. attorneys as a congressional committee, and we should always listen carefully to these requests. But that doesn't mean we want to comply with every request, because we have different responsibilities than U.S. attorneys do, as the chairman noted earlier in his comments. And so a request from a U.S. attorney does not, in and of itself, precipitate a cause by the Federal Reserve Board not to pursue its responsibilities. And so I think it should be on the record, and there may be a matter of you might defer certain types of timing circumstances, but I think you should recognize that you have a responsibility under a set of laws as well. And perhaps you could explain further.
Congressman Leach, we at the Fed very much want to pursue the individuals responsible for this, including the 9 individuals that we've already barred. We would bring civil money penalties against those individuals in substantial amounts. There's a problem, however. These are crimes that we're talking about, and the Justice Department is investigating these people to see if indictments can be brought against these people. The Justice Department is concerned that if the Fed levies a huge civil money penalty against the individual, that would be double jeopardy, and then the individual could not then be prosecuted and placed in incarceration. That is the reason that the Justice Department has written to the board and said, would you please temporarily defer the civil money penalties while we consider whether or not a criminal case can be brought.
Well, I appreciate that explanation, and it sounds very reasonable, but I hope you bear in mind that a dual track certainly may well be appropriate, but in a timing sense, there could be reason for deferral. Let me ask further if any of the panel has any indication that there is any tie between BCCI and the American thrift industry.
Mr. Leach, yes. During the latter portion of our investigation, I believe it was in June, our investigators were in London. They were consulting with the criminal investigative unit over there, and they uncovered certain information that indicated that BCCI supplied the funding to Gaith Ferrone for stock purchases that he made of the SunTrust savings bank in Miami. There is we have in our possession a pledge agreement, what purports to be a pledge agreement between Mr. Ferrone and BCCI, whereby large amounts of the stock that he bought in SunTrust were pledged to BCCI. In our notice...
Was there any evidence of First American's involvement in any way, or the law firm of Clifford and Warnke, or either of the two individuals, Mr. Warnke or Mr. Altman, being involved?
I personally am not aware of any information like that. I would have to consult the file on that, though, to give you a concrete answer. And
Fair enough. Could you provide that for the record, then, after consulting the file?
we have provided, yes, we will provide for the record whatever information we can regarding the SunTrust matter. We have previously supplied the loan agreement that I'm talking about.
I appreciate that. Now, one of the great questions is, as we look at the idea of BCCI as a rogue bank, is the question, are there others? Are there suspicions of others? Whether they be from the Middle East or south of our border, do you have ongoing investigations and concerns about that possibility? And are any of you prepared to make any comments to that extent?
I think both Mr. Corrigan and Mr. Taylor have touched upon that point. Mr. Taylor indicates that there's a definite need for the Fed to put on more criminal enforcement staff to do the kinds of investigations we've done in this B&L matter. Mr. Corrigan has raised the same point, and the board is going to do that. We have a number of, we don't have a number, but we are looking at a couple of situations that we know about that have stemmed from this BCCI matter. Yes, there are a number of
One
other...
of the aspects of BCCI that I would like to underscore is someone from a congressional perspective, is that it appears that as a rogue bank, it has attempted to bring in people of prominence in the political dimension in virtually every country in which it's operated, and often has people of prominence in the political direction from which it emanated. For example, most particularly the leader of a very important country to the United States Treasury, that is Abu Dhabi, which by implication makes it difficult for certain types of reviews to occur. And there's lots of implications of influence peddling that has been wrought. And I would just hope that it would be well understood that the United States regulators should articulate to the world, at the behest of the United States legislators, or at least in concert with them, that we are going to be the single toughest country in the world at looking at financial institutions, no matter how politically well connected. And this political connection goes not just at former secretaries of one kind or another in the United States, but at heads of foreign states, former heads of foreign states, former finance ministers, et cetera, which I think has been a serious kind of restraint on the desire or alacrity of regulators to pursue. And if anything, I would hope that there would almost be a presumption of problem when very high-ranking people are involved in ownership and lobbying, rather than a presumption of lack of problem. And that is something, as I look at this whole circumstance, it appears that the better connected the lobbyist, the worse the probable situation is. Now, does that seem like a fair appraisal? Mr. Corrigan, would you like to
say something about that, Mr. Leach? First of all, you, in your remarks, said you want the United States to be perceived as the toughest regulator in the world. Well, I can tell you that's exactly how BCCI perceived the Federal Reserve. We have examples of, in the course of taking statements and depositions from officials of the bank, in which they told our investigators that they regarded the regulatory environment they were seeking to work their way through in the United States as the toughest of any of the 70 countries within which they operated. There are any number of examples that we know of in which it is absolutely clear that they found dealing with the Fed tough business. There's one fellow that came out of a meeting with Mr. Taylor and allegedly said he'd never met anybody like Mr. Taylor. He ran into the wrestler that you spoke about. So I think that in looking at this thing in retrospect, BCCI itself obviously viewed the environment that they were trying to deal with in the United States as pretty damn tough to begin with. Now, we're not saying, even if that's true, we're not saying it's good enough. we're all saying that there are additional things in the legislative arena and hopefully through this international committee that I'm associated with that can step it up even further.
Well, I appreciate that, Mr. Corrigan. I would note, however, that one whole aspect of some of the evidence presented in the earlier testimony this week appeared to be careful memorandums involving ways to get around Fed regulation and Fed supervision. So that even though the Fed, it implies Fed toughness, but it also implies a capacity to deal with that toughness. And so I just hope that it be understood that we need a renewed sense of concern on this particular issue. And I'd like a statement from you saying that that's precisely what you intend to do. And is that fair?
Very much have the attention of the Federal Reserve.
I appreciate that. Mr. Wiley, if I could yield briefly to him, and then and I have no further time.
Well, most of this activity came through so-called, what I call a gigantic loophole now, the state agency operation. You ought to look at all of the so-called state agencies, it seems to me, or the agencies in the various states, but what authority do you have to do that?
We have residual examination authority right now under the International Banking Act. What we've asked for and what this committee has endorsed is to give the Fed the same kind of examination authority it has over state member banks. We are going to examine those branches and agencies just like we examine state member banks.
And we can't give you that authority too quickly, that's what you're saying.
That's what we're saying.
Okay.
And even without the legislation, we have the authority to do that now and plan to. I might also add Mr. Leach's comments. I think what you've stated is also true for domestic companies, that it is always the problem of the examiner to reach into the powerful pocket of the banker. The banker is the key person in the community, and that power can work for good. But when it comes that it has gone over the line, that is the art form of the business, is to be able to know when that line has been crossed and reach in there and stop it as quickly as possible. But you're always dealing with these influential people. And so the more independence that the examiner has, the more independence the supervisory process has, the better. And so we subscribe to what you say very much.
Thank you, Mr.
Mr. Hubbard.
Thank you, Mr. Chairman. To Mr. Bill Taylor and Mr. Virgil Mattingly, as we know, last Wednesday, Clark Clifford and Bob Altman testified before our committee, insisting they never knew, nor did they suspect that BCCI had acquired a controlling interest in their bank. Clark Clifford, in fact, said, quote, "My judgment is questionable. I guess I should have learned it some way. I guess I should have in some way sensed it. I did not." Well, from your investigation, from the Fed, what is your opinion? Did Clark Clifford and Bob Altman know BCCI had become the majority shareholder in First American Bank shares?
Mr. Hubbard, again, with respect, that is the very question that the Federal Reserve is considering right now, and I am going to have to advise the board on that, and it would be inappropriate for me to answer that question before the board has made a decision whether to take action or not to take action. I tell you, the Federal Reserve System, the Federal Reserve Board, is going to look at that question with the greatest care and attention that we know how. We will make a decision, and that decision will be made public. But we have not done so now.
Thank you. I'm not trying to be...
Excuse me?
I'm not trying to be unkind or humorous, but surely that would be a serious consideration for the Fed.
It is absolutely.
Answering that question. Mr. Taylor, you would have the same response as
Yes,
Mr.
sir.
May. In an article in yesterday's Wall Street Journal, it was reported that William Ryback, a top banking regulator at the Federal Reserve, refused to accept a copy of a Price Waterhouse audit of BCCI in late 1990 to prevent the New York District Attorney's Office from gaining access to this document. It just so happens that this audit report proved very clearly that BCCI had managed to acquire an ownership interest in First American Bank shares here in Washington. The article goes on to say that this incident, quote, provides the starkest illustration yet of the rivalry that appeared to grip law enforcement agencies pursuing BCCI, unquote. Now, I realize Mr. Corrigan has addressed this in his opening statement, but the question still remains, to me at least, why did Mr. Ryback refuse to accept a copy of the Price Waterhouse audit report? And, well, first of all, why did he refuse?
And as I tried to suggest a moment before, Mr. Hubbard, let me briefly review the circumstances leading up to this.
Please.
In October, early October, we learned from the New York District Attorney that they had a tip to the effect that there was a Price Waterhouse report that contained references to loans that were apparently secured by CCAH stock. Now again, I'll let Mr. Mattingly correct me if I state this wrong. The mere presence of loans secured by CCAH stock, the mere presence of those loans in and of itself was not a violation of law and was not a violation of the board's 1981 agreement. What, again, going back to Mr. Taylor's comment, what was a violation and what we subsequently found out was that the loans were used to finance the investment, the first by the investors. In any event, we got this tip about this report. We sought through several channels, including Price Waterhouse directly, to obtain the report. We have suspicions then, and we now know in spades after the fact, that BCCI was bound and determined that that report was not going to get to anybody in the United States. Us, the Justice Department, Mr. Morgenthau, they knew that it was trouble. In those circumstances, our principal preoccupation was to find out what was there. And we did agree, finally, with BCCI's lawyers that we would send a representative to London and that that representative would look at the report, not bring it back, look at the report. That is precisely what happened. The individual in question looked at the report on the premises of BCCI on December 10th, 1990. Within days thereafter, what that individual learned was passed along by one of my senior associates to Mr. Morgenthau's office, and on the basis of what was learned then, Mr. Mattingly summoned BCCI's lawyers to his office in New York, and that gave rise to the series of events that was described earlier, including the December 21st, 4 day before Christmas meeting.
And I realize you all are smart, trained, experienced attorneys, and that was an answer that's interesting, but could you just answer the question, why did Mr. Ryback refuse to answer a copy of the Price Waterhouse audit report? Can you answer that in just one simple sentence?
I'd be happy to try. First of all, he didn't. There was an argument as to how can we get to see the report and what would happen to the report if we got to see the report. And so there was resistance at allowing us to see the report. I told Mr. Ryback, go see that report. I want to know what's in it. And you go and do it. And he did. And when he did, a full report of that was given to the district attorney. And indeed, a copy of the report was eventually delivered to the district attorney. Even in talking and looking at the files subsequent to all of this, we find out that BCCI was saying the Fed, Ryback, continues to pressurize BCCI. They continue to push BCCI, and if we give him the report, he's going to turn around and give it to Mr. Moscow. And we know that's what happened.
Thank you, Mr. Taylor. I can understand your answer just a wee bit better than Mr. Corrigan's. I thank you. Regarding it, Regarding a transcript of a September 1988 conversation between Mr. Amjad Awan, an officer of BCCI who was later convicted of money laundering, and a federal agent who participated in a joint Customs Service IRS undercover drug money laundering operation named Operation C. Chase. In that transcript, Mr. Amjad Awan says, quote, "We," meaning the BCCI, "own a bank based in Washington. It's called the First American Bank. Did the Customs Service or the IRS ever provide you, a gentleman, or the Fed with information, with this information?"
No. Eventually, we got the transcript of the transcript of the undercover statement by Awan to the customs agent. We obtained that transcript in 1991. Now, this is the basis, though. I want to be fair. This is the basis of the statement made to the Fed official in late 1988, where the IRS agent calls up and says, during the undercover operation, a banker told me BCCI owns First American. Okay? At that time, the Fed official says, can we have the evidence? And the IRS agent was not able to give us the information at that time because it wasn't public. I referred to that in my earlier statement.
It wasn't public?
And it was not public at that time. They did not make the transcript public until the trial. We have been told by the Justice Department that the transcript of this communication was kept confidential because it was being transcribed and so forth and so on, and they made it a policy not to release the transcripts of any of their undercover tapes until the trial.
Well, a cynical taxpayer out there probably is wondering, is this typical of the investigations of U.S. agencies? One learns something that's highly volatile and would tend to indict someone, and yet they don't reveal it to anybody. They just keep it within their own agency. They don't refer it to the Federal Reserve, for example, as you're investigating a bank. Can't you see the cynicism that some people might have of...
I think Mr. Taylor indicated, and I share his view, that I think that the Federal Reserve needs to cooperate more, as do other agencies in these areas. But we did talk to this person, this Awan person. This is the person that I said our investigators went to and talked to.
In 1991?
No, yes, in 1991. But the person doesn't have any first-hand information. What he was basing this comment on was, quote, corporate gossip at BCCI.
Mr. Chairman, I'll try to be brief. I know others are waiting. But let me ask you this. In 1988, a special international regulatory panel known as the College of Supervisors was established by several countries with the purpose of monitoring BCCI's worldwide operations. The College of Supervisors reportedly discovered valuable evidence of BCCI's ownership of First American as early as 1988. Well, when did the Federal Reserve receive this evidence? Or did you receive any information from the College of Supervisors? And
we did not until 1991. No, I'm sorry.
In the fall of 1988, a representative of the Federal Reserve spoke to a senior regulatory official from Luxembourg, Luxembourg being one of the two chartering locations for the BCCI banks.
October of '89.
Let me ask you this. Was the Federal Reserve ever asked to join, or did you ever seek to join this College of Supervisors? I say that based on the fact that you've told the Washington Post reporter yesterday that the Federal Reserve did the best they could with a small, underfunded enforcement staff regarding the BCCI investigation. If that be true, why didn't you join up with the College of Supervisors?
The structure of the College of Supervisors initially was made up of the countries that had chartered BCCI-related banks or large BCCI-related banks. The United States was not invited to join the college at that time. There were discussions of an ongoing nature between Federal Reserve officials and the college insofar as the general financial condition of BCCI was concerned. We thought a bit about the question at several points as to whether we should push or ask to join, and we decided against that.
Why?
The reason we decided against it was because throughout this period, the principal, if indeed not nearly the sole preoccupation of the college, was to restructure, recapitalize, and revitalize this bank. And to be very frank, Mr. Hubbard, we did not want to be a party to that effort whatsoever. We wanted the bank out of business.
Well, this last question, Mr. Chairman, this is my last one. What is the Federal Reserve doing at this time to enhance cooperation between international bank regulators to ensure that in the future, banks like BCCI are not allowed to fall between the cracks of international regulation and supervision?
Well, as I said in my statement, and it is detailed in the joint statement of Mr. Taylor and Mr. Mattingly and I, for better or for worse, happen now to be chairman of the international committee that focuses on these questions. We have laid out an agenda for myself of 6 or 7 major areas that we intend to look at as promptly as possible, including such questions as, should we try to adopt within all the major countries uniform or at least broadly common standards for entry, which would mean that rogue institutions couldn't follow the course of least resistance and get around the process, in a context in which we think, for example, if the major countries can agree on something like that, all the others would fall into line. So there's a list of initiatives in our statement, which I won't bore you with right now, that are aimed at precisely those types of questions, and indeed many of the things that we're going to try and pursue at an international level are built very much on the spirit of the legislation that Mr. Mattingly was referring to earlier. So there will be a major effort here, sir.
Thank you for your answers. Thank you, Mr. Chairman.
Well, I'm going to ask unanimous consent. Yes, go ahead. I'm going to ask unanimous consent, Mr. Hubbard, be given an additional 1 minute so that I can offer for the record, because Mr. Hubbard asked Mr. Corrigan. Mr. Corrigan replied that the reason was that the main primary purpose of the college, or the collegial get-together of the original 3 countries, was recapitalization. As a matter of fact, I will ask permission to insert in the record at this point the reply we received from the Bank of England in reference to questions that the committee propounded. And I'll just read this. I'm writing a reply to your letter of 27th of August addressed to Mr. Quinn, who is currently abroad. I'm pleased to supply the following answers to the questions raised in your letter. 1, please provide a detailed summary of any discussions by the College of Supervisors concerning Bank of Credit and Commerce International entities in the United States. Include any discussion of BCCI ownership, control, or other relationship with Credit and Commerce American Holding, First American Bank shares, or with any subsidiaries of CCH or First American Bank shares. Answer. The College of Supervisors in 1988 originally comprised representatives from the Luxembourg, the Bank of England, Banco de España, the Spanish bank, and the Swiss Federal Banking Commission. The Hong Kong Banking Commission and the Cayman Islands Inspectorate joined in 1989, and the United Arab Emirates Central Bank and the Banque de France joined in 1990 and 1991 respectively. From its inception, the college discussed on a number of occasions the loans extended by BCCI to certain BCCI shareholders against collateral in the form of shares in CCAH. These discussions were held in the context of concern over the financial soundness of BCCI, particularly in relation to the size of certain of BCCI's exposure to some customers, the fact that many of these loans were not being serviced, and the circumstances in which BCCI might reduce those exposures. And then the rest of it we'll put in a record. It seems to me here, Mr. Hubbard, that the Federal Reserve Board, in exercising its judgment, acted rather disingenuously or precipitate. I would think that if you were sensitive, and I think Mr. Taylor was quoted as saying that, well, another reason is they didn't like the aspects of BCCI. Well, why not? If that's the case, shouldn't a alert regulator be anxious to go anywhere? All it would take would be to send 2 guys on a plane over to England, and you would have known that they were doing the very thing that today looks as if they were on the ball at the time. So, thank you, Mr. Roberts.
Mr. Chairman, for the additional 1 minute. I believe my
Certainly.
time has expired.
I'll yield. Well, Mr. Hubbard, but
Okay,
the time's
the time
expired,
hasn't
we'll
expired.
recognize you on your
I
own.
think there is a fine line of distinction here, which may be difficult for me to discern, but in discussions with you, I asked the same questions, and I think you responded that the College of Supervisors was an attempt to handle on an international basis the international version of the so-called too big to fail doctrine, or too big to fail institution doctrine. And I think that's in the memorandum. It says it was held in context of concern over financial soundness of BCCI. So there might have been a reason why you weren't participants in it, since Mr. Corrigan, you're shaking your head affirmatively.
That was precisely what I was suggesting before. Over the period 1989 and 1990, the principal, and again, virtually the sole preoccupation of the college was to restructure, recapitalize, revitalize this organization. And frankly, we just didn't want to be a party to that process.
And you say, frankly, we didn't want to be a part of that process, and you might want to follow up and say why.
Well, again, we, as the record is very clear, we had a very long history of suspicion, concern, and by this time, more than that, about this organization. They admitted money laundering activities in this country. And we felt that the best thing that could have happened was for them to disappear, certainly from this country.
You had participated and gone forward, that you could have found out at that time that BCCI actually owned
that is,
First
I
American
think,
Bank.
highly, highly dubious. Again, question is, would we known about the loans sooner? That is a possibility.
Strong possibility.
Strong possibility. But even had we known about the loans sooner, we still would had to have gotten the documentary evidence as to the purpose of the loans. That evidence only came when our associates went to Abu Dhabi and got it in Abu Dhabi. Now, I said in my statement that, in retrospect, you might have done something a little different here.
In retrospect, Mr. Corrigan, to be frank about it, you would have known 3 years earlier that
you would have known about
BCCI owned bank, First American Bank shares.
I want to correct what I said before. I did use the wrong date about the presence of loans in the fall of 1989, when we raised the question with the Luxembourg regulator. That's the first time we knew of the existence of loans. Now, again, the mere existence of loans in and of itself didn't get you anything. What we needed, as Mr. Taylor explained, I thought, rather thoroughly before, was to know what the loans were all about. And as it turned out, we were, I think, a little suspicious that evidence was going to be forthcoming in Europe anyway. It turned out to be right. It was in Abu Dhabi. And I think what happened, Mr. Hubbard, that changed the dynamics of the thing began in the spring of 1990 when there was the change in ownership of BCCI. And with the change in ownership, I think they probably began to feel that they had to begin to mend their ways, so that when Mr. Mattingly finally went to them toward the end of 1989, they finally acknowledged this and pointed us in the direction of that evidence. Now, there too, some time passed. You know, we didn't send our representatives to Abu Dhabi until the middle of March. But there was a little thing called a war going on then. We weren't about to send our people over to Abu Dhabi in the circumstances that prevailed in the Middle East at the time. So there are points in time when you could say, well, this could have gone a little faster here and a little faster there, but I've thought this through as aggressively as I can. And my conclusion, as I stated in my statement, is even if the thing was close to optimal, the time saving, I think, would be measured in months, not years. That's my best judgment.
Mr. Corrigan, I must point out to you that either you're very naive or you are very defensive in retrospect, which you don't have to be. I mean, there's nothing, it's too late now, but I think the record ought to show that if you had shown interest, if you had been aggressive, as you say you were, you would have gotten the Price Waterhouse report in 1988. They would have given it to you. Bank of England officials reaffirmed that. And here's what it says. Price Waterhouse thinks that the 900 million loans to shareholders of BCCI should be disclosed in the annual report in the form of a note in the accounts. This refers especially to the loans made for the acquisition of shares of CCAH, National Bank of Georgia, and Independence Bank. Now, I don't see how much more there's no use regurgitating that, because I think the record clearly shows. Now, I know in retrospect it looks a little embarrassing that you wouldn't have been eager and, as you say, truly aggressive and gone over there and sat down with the Brits and the others and found out what was happening here that you say you were on top of over in New York. Let me remind you that just recently, supposedly you knew what was going on with Salomon Brothers and their participation in treasuries, but nothing was said until you had the scandal. So what I'm saying is that the attempt here is not to try to embarrass now in retrospect, but neither do I think we ought to tolerate obfuscation in an attempt to justify a omission in the past.
Well, again,
yes,
don't misunderstand me, Mr. Chairman. As I said before, there are clearly things that one would do different. There are clearly lessons that we've had to learn, that I've had to learn from this. So don't misunderstand me, please. I agree with your point.
Well, okay. I mean, I don't want to get over here on the point where I'm trying to embarrass him, because that serves no good, and we're really not. But neither do I think there should be any excessive defensiveness in retrospect, because hindsight, of course, is always better. But every one of us can be accused of that. Mr. Hancock.
Thank you, Mr. Chairman. You know, since I studied Economics 101 back in college in 1947, about 44 years ago, and I know that there's, I think, 4 economists on the panel, I believe very strongly in the basic principle of the free flow of capital, money. I think it's absolutely necessary to our capitalistic system. But I really don't think Adam Smith thought it ought to flow this free. I think I think that he was thinking more in the idea of gold and silver, and rather than non-recourse notes and promises to pay. I've got so many questions that I'm going to have to, I'm going to try to keep them as short as possible, but I probably should ask this the other day when Mr. Clifford and Mr. Altman are here, but in your position, maybe you can answer this or maybe tell me whether we could find out. Do you know whether there was any compensation of any kind in the form of, say, golden parachutes or anything like that when those two gentlemen resigned from CCH and First American?
None.
There was none?
The examiner advises me that there were none.
Okay. Just a basic question here. You've indicated that there is some problems with the state laws being allowed to, evidently they can admit foreign banks in states now. Is that an area that that should be, maybe the Congress ought to look at on the state's ability to admit foreign banking operations?
Absolutely, yes, sir. We believe that the Congress should act to pass a law requiring for federal review of that. The states can continue to authorize it, but it should be subject to federal review and tough federal standards.
Okay. Would you gentlemen agree that the larger the scale of operation, and especially in the financial institutions or in any other operation, just like within the federal government itself, the more difficult it is to monitor and to control, and that it's and to discover criminal activity that might exist? The larger the operation is, the more difficult it is.
I would say that the larger the organization, particularly with the developments that we have in computer technology and being able to shift millions and millions of dollars with the press of a button, yes, I agree with that. It is more difficult.
Well, then I'm going to make a statement here that you all may or may not agree, or at least you, Mr. Mattingly, the fact that there's over 14,000 banks in the United States. We ought to only have maybe 4,000 or 5,000 banks. I want to ask you for an opinion on that, but that has been, naturally, I think that if we do maintain the small community banks in this country, we would have a heck of a lot less opportunity for situations like this to occur. Is there any reporting requirement whatsoever for organizations like the CCH holding company or what have you to for the major officers and what have you to report their stock holdings?
Yes, sir, there is, and Mr. Altman and Mr. Clifford both reported that they owned the stock.
Well,
the form doesn't show that they doesn't ask for information about whether they have to borrow to buy that stock.
That's my next question. Isn't there a requirement for officers and directors in banks to furnish also a financial statement?
Yes.
Did Altman and did they furnish with their financial statement, their statement of ownership, but also a financial statement, and did they disclose the loan at that time?
My review, and I've had other staff review the records that we have, there is no indication in any of the records on file with the Federal Reserve that Mr. Altman and Mr. Clifford borrowed money to buy the stock. They disclosed the stock.
Do you have financial statements at that time that from them?
I don't believe there was any requirement that they submit financial statements to us at that time.
But there is a requirement, you said just a minute ago, there is a requirement that officers, directors, and what have you must furnish financial statements.
There are certain financial statements that have to be filed with, yes, with banks about borrowings from those banks. The problem is that the borrowing here...
No, sir, I served on the board of directors of a bank in the state of Missouri at one time, and I had to furnish them a complete financial statement, the Missouri Banking Commission, a complete financial statement of my personal assets, ownership, and obligations.
Congressman, I'll have to check that. I do know that there isn't any financial statement like that I'm aware of that was filed with the Federal Reserve.
But you don't know whether it's required or not.
I do not believe it's required, no. It may be required to file it with the First American banks. That I'll have to check into.
Well, wouldn't it only be reasonable that when you get into people like, full disclosure, and when we're talking about the taxpayers guaranteeing a heck of a lot of money, that the officers and I'm talking about the top officers and the board, that a financial statement that would appear to me to be kind of a routine type thing. If we're going to guarantee, you pick a figure, $500 million we're into now with the S&Ls, wouldn't that be reasonable to require that?
It certainly is something we ought to think about. I agree with that.
It actually surprises me that you don't require it, but I'm not. At any time during these ongoing, the problems, the supposedly suspicion that I think Mr. Corrigan mentioned that you had in your mind about the possible connections of BCCI in this, was anybody aware that there were only 2 American stockholders in CCH, in the holding company? That all the rest of those stockholders were in the Middle East?
Yes, that entire list of stockholders, it didn't change much from 1981 to now.
And there were only 2 American stockholders in that whole organization?
Yes, that's right. The 2 Americans, Altman and Clifford, became stockholders in 1986.
And prior to that, it was 100%.
All Middle Eastern. All Middle Eastern.
In the beginning, there were no Americans.
There were no Americans in the beginning.
And that didn't raise a red flag of any kind?
It did raise a red flag, and that's why we sent that list to the CIA and the State Department.
When was that sent to the CIA?
It was sent to the CIA in the early part of 1981. The entire list of investors was sent over to the CIA and said, we want information. Is there any adverse information you've got about these investors? And we received back from the CIA the indication we have no adverse information on these people. We sent the same list to the State Department and the Commerce Department, and I've testified that the information that came back to them was these investors are people of substance, and we have no adverse information. That was done in 1981. We also didn't, as I indicated, we didn't rest there. We wanted to see who these people were, these large shareholders, and 4 of them were called into the board. They actually came to the board's building on Constitution Avenue, and they participated in a hearing in which they said they were using their own money, not borrowing from BCCI.
But at that time, there was no request for a financial statement or...
Oh, no, absolutely, no, sir. No, we asked for financial statements. We didn't want just their financial statements. We asked for confirmations from banks of millions of dollars that the banks were holding on deposit for those people. We asked for statements from chartered accountants about to verify that those people had the money that they say they had. We got that from a number of the largest shareholders.
In other words, you did ask for that, but you didn't ask for the same thing when it...
We asked for that when we had to approve the application in 1981. Mr. Altman and Mr. Clifford didn't need any approval from the Fed to buy that stock, nor did they seek any. I mean, the information that they had bought the stock showed up in a report filed with us in 1987.
They are required then to report the fact that they bought that stock.
After they aren't required to report. The company was required to list whether any of its directors own stock of the company. And it's in that report that they listed the stock.
But there's no requirement to
No, sir, because remember what Mr. Altman and Mr. Clifford bought was it was less than 5% of the stock of First American.
Mr. Hancock, would you yield for 1 second, please?
Certainly.
Thank you.
If they had bought more stock, in other words, if they had bought over 10%, they would have had to get the Fed's approval, and then we would have asked for financial statements and where they were getting the money from.
But the combination of the sale, the combination of the sale actually was approximately 7%? Is that correct?
No. The total amount of stock that Mr. Altman and Mr. Clifford bought, it is less than 5% of the total stock of First American.
Their joint ownership was less than 5%.
Yes, it was.
Okay.
Less than 5%.
Okay, thank you. I yield to the gentleman.
Thank you. I just wanted to ask a quick question. You mentioned that you went to the CIA in 1981.
Yes.
And later on, when I get my turn, I'll be asking you about the role of the CIA. And I understand that we're talking about checking out Middle Eastern investors, but hypothetically, how valuable is the CIA in assessing the integrity of investors when, given the real world, the CIA is often involved with some very unscrupulous characters? Now, for example, in 1981, if you had gone to the CIA and said, how about that guy Manny Noriega who's on your payroll and his friends, do we have any problem with these people investing in American banks? What would the CIA have told you about Manuel Noriega in 1981?
I don't want to speculate on that.
The gentleman can reserve that question on his own time. The gentleman's time from Kentucky has expired. Missouri, from Missouri.
Yeah, okay, thank you.
Mr. Hoagland.
Well, thank you, Mr. Chairman. I want to start out by agreeing with you, Chairman Gonzalez, and the comments that you made about second-guessing a situation as complicated as this. I think basically any situation like this can be second-guessed, and you know, the fact of the matter is you all caught them. You caught them when you put them out of business, and I think all of us would have liked you to have caught them earlier, and anyone can argue that it should have been done sooner. And I'm sure we regret that. But the truth of the matter is that you vigorously, when evidence was available, followed that up. And that regardless of any regrets, we shouldn't allow that to affect our attitude as to where to go from here. And I want Mr. Mattingly and perhaps Mr. Taylor, if first of all you might give us your assurances that you'll prosecute criminally and civilly as just as vigorously as you can any individuals with respect to whom you have probable cause.
That's the position of the Federal Reserve, yes, sir.
And you're going to be very tough about that.
That is correct.
And you won't allow any possible errors or omissions in the investigation of this matter to affect your judgment on that issue.
We're investigating this matter as carefully and as thoroughly as we know how.
Now, I'd like also to follow up on a comment made by Mr. Leach and wonder if it might make sense for you all to adopt a policy on big shots. And, you know, based on the premise that people don't hire big shots, and in this case pay them millions of dollars, unless they feel they need them. And maybe you all should put a memo out to your examiners and to your hearing officers and others, as I read some of the history of this case, that if somebody hires a former insider or a former big shot, that in and of itself should be a red flag. And that in and of itself should be something that warrants closer scrutiny than otherwise.
Well, I think we did give this case very close scrutiny. I think we went through extraordinary procedures in 1981 to find out if what we were being told was true. We did not accept, I think the record is very clear, the Fed did not accept the representations of those representatives. They tried to verify to the best of our ability what we were being told.
And I thought that was convincing, too, that the extent to which you attempted to examine their background, together with a probable cause, or together with a statutory standard that you set out in your statement.
Yes, sir.
But I think it might help if, I mean, we had a situation involving a credit union in Omaha where an examiner was deterred in being as thorough as he might have because a lot of community big shots were lined up behind the credit union. And I think it would simply be helpful. It's your judgment, obviously, and it's your call, but helpful to at least consider putting the word out to all of your people in the field that when the richest lawyer in town or the most important banker in town starts registering complaints, well, that's the time to take even a closer look.
Mr. Taylor made a comment before that I think is very important in this regard, and that is that I do think that the point that you and Mr. Leach are driving at, in my judgment, points rather squarely to the desirability of making sure that the banking regulator or the securities regulator or whatever have a degree, an important degree of independence. And I think that's a very basic point that I think follows from your comment.
And let me make one final point, Mr. Mattingly and Mr. Taylor and all of you, and that is, are you comfortable that you have sought all of the legislative changes that you need? And I know we incorporated a lot of the Fed's recommendations in H.R. 6, which this full committee has reported on and is awaiting floor action. Are there any other legislative changes that we should consider to strengthen your hand in regulating foreign banks?
I believe so. I think we want to carefully take up the chairman's invitation to go back over the legislation and see if we can improve it. It's come to my attention recently that there are a couple of areas in the criminal investigative area where the Congress has it within its authority to put the Fed on a list of agencies that can grant immunity to try to beef up our investigative abilities. And we plan to send a letter. I plan to recommend that the board send a letter to Chairman Gonzalez and ask for his assistance in getting that done.
Well, I'm sure if the chairman decides to support, if proposals like that make sense to him, why the committee will strongly support the chairman in those efforts. And we do have, it'll be 4 or 5 weeks probably at a minimum before that banking bill is considered on the floor. So we'll have an opportunity to get it done this year.
Appreciate it.
So let's be sure we get everything done that we need to.
We will.
Thank you. Thank you, Mr. Chairman.
Sure. Thank you. Mr. Kennedy.
Thank you, Mr. Chairman. Gentlemen, reports in today's Wall Street Journal and in recent issues of the Financial Times indicate that BCCI had extensive contacts with another renegade bank, BNL. In June of 1989, for instance, BCCI deposited some $72 million in BNL's Atlanta office. Bank of America's New York office acted as an intermediary in the relevant transactions. In addition, in July of 1989, some $22 or $23 million passed between BCCI and BNL via BNL's Atlanta account with Morgan Guaranty's New York office in an apparent money laundering scheme. Now, it has been suggested that in about September of 1991, the New York Fed commenced an investigation of BNL and BCCI, both separately and together. It has also been suggested that in October of 1989, that investigation abruptly ended, and on the advice, or at least with the tacit consent of the Fed's Washington headquarters. One of the senior officials at the New York Fed reportedly said that he was, quote, thoroughly disgusted with the way the investigation was handled. Mr. Corrigan or anyone else on the panel, did you or any one in your office receive any pressure from any quarter to go slow after discovering links between BCCI and BNL and the possible illicit activities that they engaged in, separately as well as together? Mr. Mattingly, were you ever similarly urged, or was it ever suggested that you not pursue the investigations of BCCI and BNL? I would ask both of you gentlemen what you are doing today to flesh out the nature of the activities between BCCI and BNL, and what kinds of activities they were engaged with, and what you found out about their efforts to launder drug money or direct funds to Iraq.
Well, let me say that we did look into, there were a number of federal funds there were a number of transactions between BNL and BCCI before BNL was seized in August. And the chairman wrote us a letter and asked us for information about that. The Atlanta Reserve Bank went in and looked at those transactions and prepared a report, which I believe, I believe it's been, information from that report was sent back to the chairman. What happened was, it looks to us like most of those transactions were overnight federal fund sales between BCCI and BNL. And in other words, they would lend them money overnight, repay it the next day. And remember, at this time, BNL was trying to fund the huge these off-book transactions. And the way they did that was they borrowed money. They bought federal funds from foreign banks. They buy it and repay it the next day. And our information is that they were buying money on occasion from BCCI. I am not familiar with the Bank America transaction, but we will look into that also.
Are you familiar with what I'm referring to with the case I'm talking about here?
I did. There was a point in the middle of what you were reading that I lost you, but let me, I think there's two sets of issues here, I think. One has to do with the original investigation into the BNL thing, which began, as you'll recall, in August of '89. Yes, August of '89. And the Federal Reserve did look into that very intensively. And all of the information that we uncovered at the time, in part through the Atlanta Fed, in part through the Washington Fed, and in part through the New York Fed, was turned over
Yeah, but what I'm asking
to the law
something very
enforcement
simple,
authorities.
which was, did your agency get any pressure from your Washington office or anybody else to stifle an investigation of BNL or BCCI?
No, there was no pressure of that nature. There were, again, some frustrating moments associated with the particular...
You received no pressure from any other agency, or any of the rest of you have never received any attempt to stifle an investigation either through the Washington office of the Fed and you're completely unfamiliar with the events that I described, Mr. Corrigan, in my question.
Mr. Kennedy, if I might respond to that in part. The Atlanta Reserve Bank undertook the first investigation of BNL after these events came to our attention. It was a very intensive investigation. It has resulted, as you know...
We can't hear you, Mr. Forrest.
Those investigations, as you know, have resulted in indictments in Atlanta. I can tell you categorically that no one in the Atlanta Reserve Bank received any pressure whatsoever from anyone.
Mr. Forrest, all about the Atlanta Reserve Bank. My information pertains specifically to the New York Fed, and to an attorney there that felt that that his investigation had been stifled, and that's the answer that I wanted to hear from Mr. Corrigan.
I'm trying to find this exact thing that you're reading from here, Senator.
I wasn't reading from the... you're reading the article in today's Wall Street Journal? Is that what you're reading?
Yeah.
Yeah, no, that has some... That's my second question, which I want to get to in a moment. I'm talking about some other information that I was made aware of.
Mr. Kennedy, in the meantime, could I answer no?
Fine, thank you.
And secondly, to tell you that, there is an investigation continuing, both as it relates to BCCI and BNL, and we have personnel assigned to the Justice Department in that regard.
Well, that brings up a second question, which I'd like to understand very much in terms of the relationship between the Justice Department and CIA and the kinds of cooperative agreements that's supposed to take place between the Federal Reserve and those agencies. Do you, in fact, have some kind of cooperative agreement with those other agencies?
Well, I mean...
We are closely cooperating with we're working very closely with the Justice Department and the State of New York in this BCCI investigation.
Mr. Mattingly, I'm sorry, my time is running short here, so I just want to cut through it a little bit. I'm aware that the Justice Department, through the Tampa U.S. Attorney's Office, failed miserably to comply with whatever cooperation you might now say exists. It had 16 hours of tapes of a BCCI official named Lodi spilling his guts about BCCI's money laundering activities and the control of First American. Yet it failed, as I understand it, to turn them over to you after you requested the information that were contained in those tapes. This certainly is an indictment of the Justice Department's willingness to aggressively pursue the kind of white-collar crime that's taking place at BCCI. In the case of the CIA, it is now known that as early as 1986, Mr. Casey and Mr. Gates and their associates at the agency had on their laps an internal report that documented in detail BCCI's money laundering and illegal control of First American. Did anyone at the CIA ever pass that information along to the Fed? Did the Fed ever ask the CIA for information pertaining to BCCI? And it is now public knowledge that when Mr. William Von Raab of the Customs Service told Mr. Gates about BCCI's wrongdoing, Gates did nothing to pursue the lead. It has also been reported that the CIA and the BCCI were to send money and supplies to the Afghan rebels to pay its informants in Asia. In addition to today's Wall Street Journal, reports that one of Bill Casey's old golfing buddies, Bruce Rappaport, controlled a bank with connections to both BCCI and BNL. Rappaport and Gaith Ferron are also very close in the oil business. Such facts raise serious questions about whether the CIA had a motive, not just to drag its feet, but to affirmatively act to conceal BCCI's activities from law enforcement officials. Did you ever, or did anyone ever, with contacts with the CIA, suggest that it was, did anyone ever feel that it was in the least bit out of the ordinary, that if none of these cooperative agreements were in place, to a degree that would suggest that there should have been greater cooperation between the Fed, which is after all responsible for implementing these policies, and the tremendous amount of information that would appear other federal agencies had? Do you feel that there was some kind of effort that stifled all those other agencies from coming forward and sharing with you information that they had pertaining to BCCI's criminal activity?
Congressman Kennedy, I can only tell you what the facts are. No one from the CIA contacted us in 85, 86.
You don't have to just, you can tell me what your feeling is about the, I mean, there's been a series of facts that we've just laid out to you. It's been in the newspapers. You can tell me what you feel about what kinds of situations developed in which information was not provided to you that it seems to me had a pertinent bearing on what the outcome of your investigation would have been.
Congressman, I've indicated I think that there should be more cooperation among agencies of the government. Yes.
Well, you know, I mean, fellas, you're starting to stonewall us at this point. I don't understand it. What is the point?
Mr. Kennedy, I have no knowledge, supposition, or opinion that anything was intentionally withheld from us. What I do have is a distinct impression, looking at our own needs, that we need to have better investigative resources.
That 16 hours of testimony by Lodi in Tampa, where they have the tapes. Morgenthau comes in and asks them for the tapes. You ask them for the tapes. They don't provide them. That isn't tantamount to them stifling your investigation.
Didn't help.
Yeah, I'll bet it would have. Well, I mean, you know, you guys are going to sit there.
Can I, Mr. Chairman, answer Mr. Kennedy's earlier question to me? It took me a while to figure out what you were asking, but I think I understand. It is true that in the early phases of the BNL investigation in 1989 that I had some suspicions. They were just wild suspicions. And the investigation was very, very complicated. Through my associates, I did succeed in making sure that my suspicions were known. That probably could have happened a little quicker, but there was never a question, or Congressman, in my mind about anybody trying to stifle the information. It was just a question of trying to get my thoughts for whatever they were.
Can you share with us, Mr. Cargan, I appreciate your forthrightness. Can you share with us what your suspicions might have been?
Well, my suspicion, to be very honest, Mr. Kennedy, was from the very beginning, I thought there was an arms connection.
And how would that arms connection have worked?
I didn't know that, but almost from the moment that we learned about the BNL thing in Atlanta, maybe I'm just too suspicious, but
not.
I suspected. I shouldn't say I suspected. That's too strong. I had no evidence, but it just seemed to me that that was something that should be looked at. And I was satisfied. I want to emphasize this. I was satisfied that my suspicions, for whatever they were worth, did get into official channels.
Were you satisfied that then, as a result of them entering official channels, that they were acted on and investigated?
I really can't judge that, and I'm not copping out. I can't judge that. I knew that as that investigation proceeded, that all of the appropriate agencies in the federal government were actively involved in the investigation, and I was fully satisfied that I had, for again, what it was worth, passed along my suspicions. I cannot judge what happened after then. I was not in any way, shape, or form a direct party to the investigation, except...
The time of the gentleman has expired. The chair will advise the gentleman that the committee has held several hearings. I don't recall if the gentleman attended them, on BNL, in which we did elicit...
Every BNL hearing, Mr. Chairman.
Well, we adduced, if the gentleman will recall, we did adduce testimony, and in the meanwhile, we too have not completed the BNL committee consideration of BNL, and there is, in answer to your question, and supporting the suspicions expressed, we do have evidentiary documentation that indeed such was the case. Some aspects of that activity and other. But that's a question that the committee is still involved in.
Mr. Chairman, in that regard, it would seem to me that what Mr. Corrigan's answers would indicate that there's every real possibility that an agency of the federal government, in an attempt to hide its own involvement with a criminal activity, stifled the normal investigative process of the Federal Reserve, stifled the normal investigative process of the Department of Justice, and perhaps the Customs Department as well. It seems to me that that is a very, very important and disturbing possibility that I would hope our committee would take an aggressive look at.
Let me say the chair does not agree with that interpretation as to Mr. Corrigan's thrust of his words. And
possibility, Mr. Chairman.
Well, but the gentleman is making a affirmative, positive statement, not a possibility, a contingency statement. So, but there's no use. It's speculative. I'll say that I do not agree with the gentleman's interpretation or conclusion reached on the basis of what Mr. Corrigan.
Conclusion, Mr. Chairman. I said it was a possibility.
Okay, all right.
I want to be sure again, Mr. Chairman, that I am not suggesting that we were stifled. I mean, I don't want to...
I interpret it that way, Mr. Corrigan. I think any reasonable interpretation. Before we recognize Mr. Neal, I will ask unanimous consent that Mr. Moran be permitted at this point to offer some questions in writing to the witnesses, and also ask unanimous consent for any other member of the committee who wishes to do so, both those present and those absent. And with that, recognize Mr. Neal.
Thanks, Mr. Chairman. The Federal Reserve has an outstanding record in the area of regulation, and I know that, and I have an enormous regard for that record. But I've got to tell you that I am really troubled by what I see as so many loose ends here. Now, let me tell you what I'm talking about, and maybe you can help clear this up. I'm looking at a document here. This is a copy of a letter from the Federal Reserve to Mr. Frank Van Court, Esquire, and apparently he's representing, let's see, who is he representing? Mr. Ferrone, who apparently is one of the nominees of this BCCI. And in this letter he says, "We would very much appreciate hearing from you concerning the nature of Mr. Ferrone's investment in NBG, National Bank of Georgia, I take it, and why control of these shares should not be attributed to BCCI." there's a suspicion within the Fed back in 1978 that that BCCI is really buying these shares. Now, in 1987, there's criminal activity within BCCI. It's been in your testimony this morning. Several of you have mentioned this. In 1988, BCCI and 5 executives are indicted on charges of laundering drug money through several U.S. banks, including First American. BCCI forfeits $14 million. In 1989, February of 1989, this is in an article in the Los Angeles Times. Special Agent David Burris and his supervisor Maurice Detmer come to Washington to meet with Mr. Ryback. The IRS agents provide Mr. Ryback with a briefing of the evidence obtained concerning the BCCI First American link. According to the IRS agents, they offered to provide witnesses who could describe how BCCI owned First American. This is in February of 1989. In April of '89, a federal grand jury in Tampa returns an indictment against BCCI, alleging that laundering drug money was part of BCCI's corporate strategy. And there are several other examples. But the point is that now let me just make one other point, and I'll run out of time if I don't yield to you for an answer. I want to ask you to comment again, if I may, on this question of why you all chose not to join this so-called College of Supervisors. I raise this again. You, Mr. Corrigan, I understood your comments on this, but I'm also looking here at a letter from the Bank of England in which they say that from its inception, the college discussed on a number of occasions the loans extended to BCCI to certain BCCI shareholders against collateral in the form of shares in CCAH. Again, one of the major questions. By the way, I forgot to mention that earlier, in the '78 document, the attorney of record there was Mr. Altman. So apparently Mr. Altman was engaged in this for a long time. He was representing Mr. Lance, apparently. Well, let me just complete the thought here on this College of Supervisors. These discussions were held in the context of concern over the financial soundness of BCCI. Remember now, this goes back to 1988, I believe. Let's see, financial soundness of BCCI, particularly in relation to the size of certain of BCCI's exposures to some customers, the fact that many of these loans were not being serviced in the circumstances in which BCCI might reduce these exposures. The point I'm trying to raise is it just seems to me that there are so many examples of red flags going up concerning criminal activity, concerning links between BCCI and these other institutions, that it's just not up to your usual high standards, it seems to me, to not get involved. And that's what I wish you'd help me understand a little bit better.
Again, I think we've all made it clear, Mr. Neal, that we aren't ourselves entirely happy with the way this thing played out. We think we could have done better, and we'd like to think that we've learned enough that if we have to go through something like this again, God forbid, we will do better. Again, if I can just pick up a moment on this college point again. In in the period right after the formation of the college, as I said, and throughout much of its existence, they were really focused on restructuring the bank. Their discussions about the loans in question was strictly conventional banking supervisory concerns about collectability and value. At no time did they mention the existence of these loans to us until, as I said, the fall of 1989, when a Fed official raised the question with the then chair of the college. The chair of the college said, yes, there are the loans there, and he asked if he could provide further information. Some months later, we went to the Cayman Islands representative on the college and asked the same question. We're told we have no information. Now, I'm fully prepared, and again, it was, we're into 1990 now, and finally we do get that information. I'm perfectly prepared to concede that if I had to do it over, if we had to do it over, we'd probably do something different there. But I also think that the fact does remain that, beginning in that period when we talked to the Luxembourg supervisors at the end of '89, even then I have to concede that the information coming back to us was kind of slow in getting there. So it's not the most elegant part of the story, I would.
Mr. Neal, I might add that to what Mr. Corrigan has said, that first of all, I want to make it very clear we were not invited to join the college. Let me also make it clear that evidence in the files that, from what I understand, has been turned over to the committee indicates that BCCI strongly lobbied to keep us out of the college. 3, in retrospect, yes, maybe we should have been, but the concern really is one of, do you provide credibility to BCCI by being part of this college? I look at the college and I see its history. And had we joined the college, had we done exactly the right thing in the college, maybe. But I fear that our approach, and I think Mr. Corrigan has said this very well, our approach differed at the time. We were not trying to reconstruct. We were trying to see a company that we had little trust in exit from the country. Now, in retrospect, what this points out, I think, going forward, in which I think we have committed pretty strong resources to in the form of Mr. Corrigan as the head of the Basel Supervisors Group, I think that any body like this that's formed in the future, we would probably encourage the other supervisors to bring that to the Basel Committee, so that indeed everyone in the supervisory mechanism, the major countries, would be aware of this, not only in its existence, but its activities.
Well, yeah, I'm sorry.
I'd like to make one final comment to what you said, Congressman Neal, and that is that I think if you look at the record fairly, it will show that the Federal Reserve never turned away from BCCI. I mean, every time an allegation was raised about BCCI and First American, we did the very best we could to check into it. I mean, '81, we went through those hearings and procedures. When we got this information in '88 that you referred to, we had the Reserve Bank go in and look. We talked to the criminal prosecutors in Tampa. There are things we should have done. There are things with hindsight that I wish we had done and done differently or quickly. But I can assure you, we never turned our away from this issue. We looked at it, and we continue to look at it, and in the end, we were able to uncover the truth.
Well, let me just ask this question then. Are you confident now, or do you feel pretty comfortable now? I don't guess any of us can be totally confident, but that as we go forward, that with all of these countries that appear to be encouraging offshore banking operations to avoid laws and regulations, I can't see why in the world else the Cayman Islands, for example, would be a banking center, right? Unless it's to avoid law and regulation, or Panama, or Bahrain, I understand, is a banking center now, and others. I mean, do you feel comfortable now that we'll have a way of keeping up with these high flyers?
I'm with you, but this is another reason, Mr. Neal, why this international dimension is so important. You know, if there's a tax gimmick or something that makes the Cayman Islands or Bahrain or whatever attractive as an offshore banking center, and just hypothetically say, we in the United States say to our banks, you can't go there, or if you're there, you got to get out. If we do that and other countries don't join us, then again, we're putting our banks in some sense at a competitive disadvantage. So we've got to get this least common denominator thing out of there, and that is one of the reasons why the work of this BIS committee can be so important. If we're going to do something like that, we've got to do it as a group of countries.
No, you're right. Now, is that going to work? It's worked so far with capital standards, as I understand.
I'm going to give it my best shot.
Well, what do you think? I mean, do you feel like it's going to work? Are we going to get
I feel confident. I really do feel confident that we will make some very, very important progress here. The one thing that hasn't been said that should be said is my fellow central bankers and central bank governors are, in many cases, more outraged about this BCCI thing, if that seems possible, than we are, because in their jurisdictions, unlike our jurisdiction, individual depositors lost a lot of money.
Yeah, no, I know.
So I can tell you that both at the working level and at the level of the governors, this is a case that has generated a tremendous amount of interest in sensible reform.
Thank you, Mr. Chairman.
Thank you. Mr. Bento?
Mr. Chairman, thank you. I regret that I had been in and out today and appreciate the opportunity to question the witnesses. One of the concerns or reoccurring concerns that I have are not unlike my colleague from North Carolina, Mr. Neal, because, I mean, here in 1981, you have a decision made that you're going to, in fact, try and bar BCCI takeover of Financial General and other financial institutions. Incidentally, this is, as Mr. Clifford pointed out so aptly the other day, one of those grandfathered institutions that has this ability to go state to state. We don't have very many of those. We have enough, but they are, as you know, gentlemen, a special responsibility of the Federal Reserve Board because of your regulation of holding companies. And so in 1981, you make a decision that there should be no financing of the transaction provided by BCCI in terms of this particular agreement. You make that particular requirement, but apparently have no ability, from what I can see, then or apparently no ability exercised since then to do anything about it. And why make that particular requirement when you have no ability to deal with and implement and enforce that? What were you relying on? Voluntary enforcement, Mr. Mattingly?
No, that is a...
Speak into the microphone so I can hear you.
Congressman, that is a commitment that was offered to the board, and it's a violation of federal law to dishonor that.
How do you enforce it? How do you police it?
Well, in this case, write an explicit representation. I've got loan documents that show the bank made the loans. I've got it.
Well, yes, we have it. We have it in 1990. That's when we have it. We have it 9 years after the incidents have occurred. We have it. Is there any ongoing requirement in terms of any type of change of ownership of stock requirements that are made of the principals?
Absolutely, sir. That's one of the areas of the legislation that we've recommended.
How many notices did you receive from the ownership and change of stock ownership with regards to First American bank shares?
Sir, we received none, and we've asked that the Congress, this law,
you had no change of ownership in that 9-year period.
No.
No notices are
no
provided.
Notice?
Is that
no.
right? Well, I got one little taste of the investigation that you were doing. That was the letter to Mr. Altman. In other words, you said that there were rumors, and so you sent Mr. Altman a letter. Is that correct? And asking him to in fact relate the principal ownership, whether or not BCCI had any ownership or any loans out that, for instance, had recourse to the stock of First American Bank shares. Is that correct?
That's correct.
Essentially, you sent in that type of letter, and so Mr. Altman asked BCCI if they had any, and they said no. And he sent you back the letter and said no. And that's the sort of investigative capacity of the powerful, mighty Federal Reserve Board, is send a letter out to Mr. Altman. Mr. Altman asks BCCI, and that's the answer you got back, and you call that regulatory action and enforcement?
I think the record would show we were doing a little bit more. We went down to the U.S. Attorney and asked the U.S. Attorney, what information do you have? We went to the foreign bank regulators of the principal bank subsidiaries and said, here's this letter that Altman has sent us. Is this true? We went to the home countries of these banks.
In other words, what you're telling me is you have no ability, in other words, to pierce the veil here. Basically, what you're telling me is that you have no ability to pierce the veil in terms of what's going on in terms of this regulation or this enforcement action. You have no ability to pierce the veil to get that information. If someone wants to stonewall you, you have no ability to deal with it.
That is correct. We've asked for changes in the law, which are in H.R. 6, which would require a foreign bank lending money to report that. We're trying to make progress in this area. Nobody wants to know.
Well, what is our exposure in this particular area? What's our exposure? I mean, how many of these types of requirements do we have that we are now currently enforcing, where we're preventing foreign banks from loaning money to other principals that are actually in ownership of U.S. bank holding companies?
I think this is the only one that comes to mind, was this particular
situation. Well, I mean, that's what I'm trying to say. Do you have 100 of these that you're regulating?
No,
but this is a very unusual type of circumstance. Is that correct?
That is correct. We do not have a lot of these.
To me, that just seems to send out all kinds of bells in terms of what's going on here. You have one like this, the only one, you have no others, and yet these types of documents coming across your desk don't begin to raise more questions than they have raised.
Well, sir, they did raise questions, and that's why we took the various actions that we've described in our testimony.
Well, I'm, reading. Sometimes I think the articles that come to us are sometimes very helpful in terms of trying to draw together all of the details. But, for instance, one of the events that I find very unusual is that after all of these questions and concerns are raised, about BCCI and other transactions, First American Bank Shares applies as seeking Federal Reserve approval to buy a small bank in Pensacola, Florida. The Fed conducted a special inquiry but found no ownership link between BCCI and First American, and therefore then approved that. Is that correct?
That's correct.
This occurred as I recall, in 1989?
Yes, sir.
Well, why don't you tell me about this extensive investigation that you conducted at that particular time? This, apparently, the Altman letter was just one of them. What else did you do at that time?
At that time, the Federal Reserve Bank of Richmond went in to the bank, questioned senior management about whether or not the commitments were being honored. We requested that each of the First American banks, the CEO of each of the banks, be surveyed to determine whether there were any kind of financial dealings with BCCI.
And the report was?
And the report was that there were no irregularities. There was a correspondent account relationship between the bank in New York and BCCI, but it looked like an ordinary course of business relationship. At the same time, our staff called the IRS, who was investigating this information, and asked them whether they had any information about this BCCI First American link. I could go on. 4 months later, we went down to Tampa and talked to the U.S. Attorney. 3 months later, we asked the Luxembourg regulator. 3 months after that, we go back to Tampa. I mean, there's a continuous course of conduct here of the Fed trying to find out information about this relationship. And we're not
What about the the Tampa relationship? And testifying before the Senate panel last May, Mr. Mattingly, you said that the only effort by Tampa investigators to pass information occurred in December 27, 1980, by an agent, Mr. David Barris, to William Ryback, who's sitting behind you, I understand, the federal bank supervisor. But in the documentation or the recitation in this article I'm reading, it says that the law enforcement sources said on February 1st, Mr. Burris and his supervisor, Maurice Detmer, flew to Washington to meet with Mr. Ryback. Although the preliminary goal of the agents was to obtain information for an upcoming criminal trial, the sources said they provided Ryback with a full rundown on the evidence that had been obtained about the BCC First American bank link. This was in early 1989. What about that particular suggestion? What happened on the basis of that?
That was on February 2nd. We do not believe that that is accurate. I have had discussions with the IRS agent involved in that, and I have had discussions with the board staff official. As far as we're able to determine, there was no detailed explanation given to the Federal Reserve during any of this period.
Well, what do you expect? I mean,
my testimony has, the testimony that we have submitted has our understanding of the contacts during this period of time. There was a meeting between Mr. Ryback and the IRS agent. According to the IRS agent, there was a meeting between Mr. Ryback and he on February the 2nd. They were discussing the history of BCCI and CCH, what kind of information the Fed had, the common ownership between the two institutions, and so forth and so on.
Well, were you relying on the IRS to provide you the documentation? I mean, is that isn't really their primary responsibility, is it? Whose responsibility is it to in fact develop this type of information when a problem exists?
It is the Federal Reserve's responsibility and obligation to do that.
Well, I think that what this points out, of course, and I think that this concern about the viability of limiting offshore banks because of putting us at a financial disadvantage, what about the disadvantage of being open to this type of misuse and abuse of the American financial system and of the Federal Reserve Board and other responsibilities here? It seems to me that should at least be some consideration in the process of this investigation and this effort, Mr. Chairman. But I don't. It seems to me that the underlying concern about competitiveness in this area. I mean, competitive for what? You know, to what extent? Do we have? What is the extent of foreign ownership today of U.S. banking interests? Can you give me any type of idea, Mr. Taylor or Mr. Mattingly?
Mr. Chairman, I think that it depends how you measure it, but I think the estimate that I think is most reflective is if you take all of the branches and agencies and you add to that all of the subsidiary U.S. chartered banks that are owned by foreigners in the majority, we don't know about minority holdings, you probably approach somewhere around 20% of the U.S. banking system. That any of my colleagues choose to.
And this is obviously growing and has grown dramatically during the decade of the 1980s. Is that correct, Mr. Taylor?
That is correct. And
what is the type of budget growth that has been dedicated to the supervision? You know, you said that it was adequate, it was efficient. You'd like to see it better. You're going to use the Chairman's statement to help you foster that. What type of budget do we have that deals with that tremendous investment that is being made, that 20% of the U.S., which obviously is into the trillions of dollars?
Well, with respect to the subsidiary banks that are owned by foreigners, those are already supervised, of course, by one of the three agencies.
What is the budget that we have to deal with that?
Well, I mean, that would be the collective budgets of the FDIC and the Fed and the controller for those particular banks, and I'd be happy to research it and submit it for the record.
Well, no, but I mean, in other words, your budget. I'm talking about your budget for that purpose in 1991 for the tasks that you have before you.
What is my budget for supervising foreign banks?
Yes.
I think probably I would have to collect the budgets of all of the reserve banks.
Can you give us some indication or some figure with regards to correcting it in the future? Some estimates, some ballpark estimate?
Well, I think it's going to be some.
I think it's about $250 million in supervision.
It's going to be costly because right now we are proposing that we examine branches and agencies of foreign banks as if they are state member banks.
I'm not asking you what you're proposing. I'm asking what you're spending or what you have available in terms of resources in 1991.
Well,
When I looked at some information, it's foggy in my mind, but I believe it's about $250 million that's devoted to supervision of all by the Federal Reserve, throughout the Federal Reserve system, but that's to all banks, domestic and foreign.
That doesn't differentiate.
No,
Of course, I understand that your budgets may not differentiate. Thank you, Mr. Chairman.
Thank you. Mr. Kondrarsky.
Thank you very much, Mr. Chairman. Mr. Chairman, I congratulate you on holding these hearings, particularly today, even though a lot of us would have to be away. Certainly, this is an important issue. I sit here and I get curiouser and curiouser, as one of our comic characters has said in the past. I have not yet been able to discern in my mind the motives, and it seems to me that in too many instances, greed and profit alone are not significant and sufficient motive in these cases. So one question I'd like the board to address, the panel to address, is, are you satisfied that we're anywhere near what the motives are here? Now, the one question, though, that I want to raise from some information and to see whether bells go off. I'm reading an article from the Wall Street Journal, and it indicates that Mr. Greenspan, in January of 1991, passed on a vote to issue a cease and desist order. And he later on says that he did so to avoid a small conflict of interest because he socialized with some of the parties. And I dare say, gentlemen, that the parties involved in this case, I doubt whether there's anybody on this panel that at one time or another haven't been to a cocktail party or a function that one of them haven't been present. I certainly have at a Democratic convention 4 years ago, Mr. Alt.
The gentleman yield?
Yes, Mr. Chairman.
The chairman hasn't.
Very
to his
the fact that Mr. Greenspan reclused himself strikes me that there should have been other questions asked. I'm curious whether they were asked.
Let me answer that if I can.
Yes.
The chairman is an acquaintance. He has met Mr. Altman on several occasions.
I assume that.
All right. This vote came up. Mr. Taylor and I went to the board and asked that the cease and desist order be issued. The chairman was unsure in his own mind about whether he should participate or not participate because of this acquaintance that he had with Mr. Altman.
Performing his function. You're saying cease and desist. What more could he do in an honorable way?
He was trying to be very scrupulous and careful.
Are you sure that, or have you investigated the fact that at some time Mr. Greenspan's prior life of being an official, he may have been a consultant to some of these parties? Has that been examined? We've had testimony before this committee in the S&L scandal that on 18 occasions, Mr. Greenspan was a hired consultant for 18 savings and loans who gave him a good, clear bill of health, and they subsequently failed. Now, as your investigative staff go on to inquire as to whether or not, I'm not suggesting that there is, but ask the question, is there any consulting fees or profits that have been received by Mr. Greenspan or anyone else in an official capacity of the United States government or your agency? Have you made that inquiry?
I have discussed with the chairman the reasons why he wanted time to consider whether he should recuse himself, and that was not mentioned. What I relayed to you is what he told me. Now, the chairman subsequently decided that this acquaintance that he had with Altman was not sufficient to recuse him from this matter, and he has voted on a number of occasions on actions that we have brought to the board to fine BCCI, to make other cease and desist orders, etc.
Do you think we should inquire as to anyone having had prior consulting relationships with these parties? They seem to be pretty well networked in this government, the past government, and everyone else. Do you think that's a reasonable inquiry?
Sounds reasonable to me.
You think we could make sure that we find that out on the record and have a written statement? Because I'm curious about this question that was put to, with all this information floating around of a connection between BCCI and First American, and then they make an application to buy a bank, and you know all the transactions, you know the stock transaction of Clifford and Altman with First American, and I don't know why their statements as officers and directors, I'm going to check the law on that, but I sat as a board director, and I know I had to disclose the source of the money used to purchase the stock in that bank.
You would have to do that, yes.
Did Mr. Altman and Mr. Clifford disclose when they were officers and made the purchase of 5% of the stock of First American Bank? Did they disclose where they got that money?
No, they didn't, because I'll check this myself, but my understanding is that the amount of stock that they bought was not sufficient
I'm
to
not
trigger.
talking about controlling interest. I didn't control the interest of my bank, but I had to disclose to that institution and the federal government that when I made a purchase of stock in the institution I controlled as a director, I had to disclose the source of that money to be certain that there wasn't interlocutory relationships. I suppose that was the obvious implication there.
I will.
Now, you didn't know whether they did it then. You're going to check that.
Yes.
But in 1989, when First American made the application to buy the bank in Florida, didn't you all think that maybe this is a good time to sit down with Mr. Clifford and Mr. Altman and go through an interrogatory with them to put them on the record under oath as to the disclosures, not these stupid letters that we're getting back and forth? If one thing Mr. Altman impressed me with yesterday, that he knows the law and he knows how to comply with the law and to make the appearance of compliance with the law, and that he did very well. Now my question is, didn't you all suspect that at some point that you could have gotten these people on record under oath to determine whether or not there was some sort of an organized effort here?
Sir, we did send the examiner in, and the examiner, this is an examiner, and it's a federal crime to make a false statement to an examiner. The examiner talked to Mr. Altman about the situation, the link.
But you had to know, Mr. Altman's a very clever lawyer. He was asked the question whether or not any of the loans were made by these shareholders from BCCI, and then as a lawyer, interesting enough, wearing the same hat as lawyer for BCCI, I asked them to make a statement out, and they say there isn't any relationship, so he's not responsible. But he conveniently avoided telling you that he and Mr. Clifford had made such a loan, except the stock would now dispose of. But since the question wasn't specifically delineated to that question of past or present, he escaped the answer. I'm not sure whether he escaped the answer in my own mind. But in dealing with a person over these years and seeing this contact, didn't it strike you that these are pretty clever people that we better be a little more precise with?
I think that's one of the lessons that we've learned in all of this, is that we at the Fed are going to have to make more use of our subpoena powers and our ability to take depositions and put people under oath. That is definitely one of the things that we've learned from this episode. That's one of the reasons that drives us to make the recommendation to put on investigators who can do that kind of work.
Okay, if I may, Mr. Chairman, just one thing. Are you agreeing with me? I saw Mr. Corrigan start shaking his head there. We're not at the bottom of this wasn't purely a little profit or greed motive here. There's something. Have you, in your own mind, come up with what caused people about such outstanding reputations to get involved? The implications of the system, what effect? Have you come up with something? Is there a scheme behind this?
Congressman, there are a lot of questions that we have about this whole BCCI thing. You know, what were the motives? You know, where did the money go? And the question that you raise is also one of the major, one of the questions that we have. There are a lot of unanswered questions. This is the biggest fraud that we have ever encountered, and the reasons for the fraud and what happened and why they wanted to buy an American bank and what was in it for them. Those are questions we have not been able to get to the bottom of yet. We're still looking, though.
Have you discovered on BCCI or First American any loans to public officials, past or present, of the United States government or others, or significantly uncollateralized situations?
Suffice it to say that these banks are being gone over with a fine-tooth comb. If there is information of any kind of improper activity, that information is being transmitted to the appropriate law enforcement authorities.
Now, if you could give me a yes or no, Mr.
What's the question?
Okay. Have you discovered the names of any past or officials of the United States government that have received loans, either favorable or just loans, from BCCI or First American or any of their affiliates?
I guess from BCCI, no. From First American, there have been some loans.
And how significant are these?
I don't think I can begin to comment on that matter.
Why would the amount?
Because that is a matter that that we are currently investigating, and that other agencies of the United States government are also investigating.
How would that compromise by telling us the amounts of these loans?
I personally don't even know what the amounts are. They're not. What are the amounts? It's a very limited situation here. It's a very limited situation. From what we know now, it's a very limited situation. And the...
Are they present officials of the United States government?
No. No.
Are they past officials of the United States government?
I'm going to have to respectfully decline to...
Are we ever going to receive that information?
We have an investigation underway into all matters associated with this BCCI situation.
Yeah, but, you know,
I've testified before, when we can get information, we refer it to the law enforcement authorities, or we take action.
Sometime the law enforcement agencies don't take action in this country, or haven't you heard of that problem that we've had over the years? I mean, how are we going to protect the American public or the Congress of the United States from acting and respecting certain individuals if, in fact, they were recipients of highly uncollateralized loans by this bank fraud?
I think that you've got the attention of the United States law enforcement authorities in this matter.
But we want the American public. They're the taxpayers. They're the ones that pay for you and they pay for me. They have a right to know who these people are. Is that going to be disclosed publicly?
I think, if I may.
Go ahead.
I think we have to be a little bit careful here. There is a matter of, you know, individual rights too. If we detected
individual rights, but Mr. Corrigan, there isn't anybody in America on this committee that would have been highly impressed to find out that millions of dollars are a loan to two lawyers in town that represent BCCI and buy a bank that would have been much more highly suspicious than you folks. I'm not at all content that you're sufficiently suspicious. I am. If you tell me a public official has an uncollateralized large loan, I know what that may represent. I get suspicions like you do. It may not be a loan.
Again, I think what Mr. Mattingly, if I can put words in his mouth,
officials aren't, excuse me, Jerry, public officials, past, former public officials aren't barred from borrowing at U.S. financial
institutions. No, but we have to disclose it. That's what's nice about our system. And when I find out that somebody didn't disclose a loan, there's generally a reason why they didn't disclose a loan.
There is definitely cause for concern if a loan wasn't disclosed.
If Mr. Clifford and Mr. Altman had to do what every member of this Congress has to do, and every high official of the United States government, there wouldn't have been any question that the purchase of the First American stock was made by foreign loans uncollateralized. We wouldn't have a problem today. You wouldn't be spending the millions of dollars in investigation. But since you fellows don't ask those questions, now that we know that there is someone out there, we want to know, and the taxpayers want to know.
I can understand that. And we are doing what we can to get to the bottom of this and to make the appropriate response by the federal government.
God, I hope it's not the CIA.
Well, I hadn't known before that the gentleman from Pennsylvania had been a banker. Now I can understand why he was so strong on the CRA situation. But I think...
Mr. Chairman, may I respond to that?
Certainly.
Yes, Mr. Chairman. I sat as a member of a board of a bank about $40 million. And I did see extensive times during that tenure that excessive costs had to be expended by small banks of that size to comply with the paperwork of either the Fed or the federal regulators, when in fact most banks of that size either operate and perform loans locally within their community or they don't function. so that I saw it as a way of being very efficient, allowing small banks to continue in this country rather than having it shrivel down to BCCIs.
Mr. Moran.
Thank you, Mr. Chairman. While any of the members of the panel who would be able to respond, I represent a substantial number of constituents who have deposits in and loans from First American Bank of Virginia. I have told them that, to my knowledge, I have seen no evidence that their deposits have been used for any illegal activity whatsoever. Now, this discussion with Mr. Kanjorski may raise some question about that. I trust it doesn't. The problem with having to be evasive about answers is that it raises suspicions on a whole broad range. But can anyone on this panel confirm that, to your knowledge, there has been no illegal activity conducted with the deposits of First American Bank in Virginia?
Mr. Moran, we investigated that twice. We have found no evidence whatsoever. These were special investigations. We inspected the holding company on 8 different occasions, and we reviewed the examination reports of the primary supervisors of the subsidiary banks, and we have no such evidence. In fact, the one who really lost on this thing, in my judgment, is BCCI. First American, you wonder why they bought it.
Yeah.
Because they put in over $500 million worth of capital. They took out no dividends. The company is now bankrupt. It's being dissolved all over the world. And they were the ones who really came out on the short end of the stick, not the customers of First American.
It is querulous. It seems, though, that the only explanation at this point is that BCCI really wanted a credible representation in Washington, perhaps as a front, but for whatever reason they were not using First American as a conduit for illegal activity. It served their purpose simply to own or have control of a bank that had a positive reputation and seemed to give them access to the people that they wanted. That seems to be the purpose of the bank, rather than the kind of money laundering and so on that took place through other banks in their operation.
Mr. Moran,
Mr.
we have not found any sort of material indications of criminal misuse.
Good.
At the same time, I have to point out that, you know, the local area has its real estate issues and so forth, and First American, like many of the organizations, has reported losses.
Well, I'm very much aware of that. But those are not because of illegal activity. It may have been
I would also offer
bad
that
judgment is primarily because of the real estate market in the area.
I would also offer that we continue to look. I mean, this is a very complex process, and we continue to look.
Sure.
So far, I think Mr. Black's representations are fair.
Yes, very good. I'm very pleased that we could establish that for the record. In May of 1990, Regardes magazine came out with an article. You couldn't miss it. It had a picture of a sheik on the cover, and it was a very extensive article. The title was "Who Owns First American?" And there were 2 subsequent articles in the Wall Street Journal that showed the background and seemed to confirm the fact that First American was, in fact, controlled by people who also represented BCCI. Was there specific action taken in reaction to that information? Did you already have all of that information available? Did you just decide that this is not our responsibility unless we get a formal charge? Or was, in fact, action taken that you could show that the Federal Reserve was on the ball and reacted immediately to information that certainly was relevant to your supervisory responsibilities? Mr. Mattingly?
At that point, we were in the process of negotiating an information sharing agreement with the New York County District Attorney in New York to try to get to the bottom of this thing. And in August and September, Federal Reserve attorneys and others met with the New York County District Attorney's Office, reviewed information from the grand jury, and it was through that process that we eventually got the tip about the report. And
so that information was already known by you. There really wasn't any new information you were not fully cognizant of at the time in May of 1990.
We had a lot of that information in the files, and we did review that. We talked to people about it, and as I say, we were in the process then of actually talking to the county attorney in New York to try to get what information he had about that very subject.
Fine. Mr. Chairman, may I ask one final question? It'll be a short one. Thank you. When you went through all of the extensive discussions with the representatives of CCAH, and they must have shown you or been required to show you the source of their financing, of purchase of CCAH, where if we buy a house or an automobile or whatever, we have to show the source of our financing. Did they either not disclose fully or deceive the Federal Reserve in terms of the actual source of their financing that enabled them to purchase CCAH?
Right. Well, that's the unusual thing about this case. The people who in 1981 came in to buy the stock, they had the money to buy this bank. They didn't have to borrow a single dime from BCCI or anyone else. I mean, we have statements from banks indicating that the largest shareholder has millions of dollars on deposit there. It wasn't a situation where the people who were proposing to buy the bank didn't have the money. They had the money.
So you assumed it was just cash out of pocket
they said that. That's what they said. We have these. They said it. They have these balances, and we said, "Well, show us the balances." They showed us the balances.
Mm-hmm. And we only find out after the fact that they were non-collateralized, no interest, no term loans that they were getting from BCCI. In other words, acting as fronts for BCCI. Yeah.
We found that out at the end of 1990 and 1991.
And you don't feel that there's any way that you could have uncovered that information in retrospect? That's my last question.
I'm not going to say that. I think that there are things that we might have been able to do that might have led us a little earlier to where we are now.
Okay.
But we did everything that we could on our radar screen at that time to check those allegations.
Okay. I'm going to ask for the record. I'm not going to ask you for a response for now, but I will ask for the record if you have any indication as to the total amount that Mr. Clifford and Altman received as a result of their relationship with CCAH, BCCI, and First American. It might be relevant. With that, I'll conclude my questions. Thank you, Mr. Chairman, and thank you very much for conducting this hearing. I know that it's important to the entire American public, and we appreciate your diligence in this hearing.
Well, thank you very much, Mr. Moran. We have tried since 1989 to maintain a sense of urgency and priority, but it's very hard to overcome, even here within our own institution, the inertia and the attitude that as long as the roof hasn't caved in altogether, we'll go business as usual. This isn't business as usual time. We're on the payroll. We get our check for each day of the week. So I hope sooner or later the majority members of this great Congress will realize that we cannot continue business as usual. We're going to have expedited, and particularly on the committee level. So that's all we're trying to do. I'd like to sum up, and I'm going to impose on your patience a little bit more. What we have found most frustrating, and let me remind all persons here present, in the constellation of the what we call full standing committee, when it comes to budget, we're not top. Commerce and Energy, for instance, has almost twice the budget the Banking Committee has. They have a staff commensurate in that different range. We have tried since the beginning, 1988, when we discovered that it would be the decision of the Policy and Steering Committee that I'd be chairman. I found out with quite a shock in December of '88 that there'd be difficulty in meeting the payroll because of the way the accounts had been kept, but mostly because we had lost $300,000 as of October the 1st, because that amount of money had been turned back by the committee to the House Administration Committee. Well, ever since then, we've been trying to catch up and trying to get some reasonable. Let me say that also in the peculiar administrative setup in our bureaucracy, I, as chairman of the full committee, actually have 10% of the staff. We actually have less than 19 members, full staff members on the full committee. We have 8 subcommittees, and one subcommittee, for instance, has just about 1 staffer less than what we have on the full committee. Yet 90% of the legislative effort has come from the full committee level. But even given these restrictions, I don't know that more money and more staff necessarily means more efficiency and dispatch with which the business that, as I say, we've had a double challenge. We've had to catch up with the past, where through omission we didn't do what we should have been doing, and then try to keep pace with the present and anticipate the future. And in this high state of flux, you know that it's beyond just average human beings like ourselves to try to do. But it's been frustrating to find, for instance, that in the case of the B&L, which I think is the matrix of the case and the problem that we've got, we asked the Federal Reserve, we sent an interrogatory, and we asked for information. One question was, does the Federal Reserve maintain accounts with these central banks? That is, and we listed some of the countries. What is the nature of these accounts? Gold holdings, deposit accounts, clearing accounts? What were the dollar balances of such accounts on May the 1st, 1990, June the 1st, 1990, July the 1st, 1990, and August the 1st, August 15th, September the 1st, and November the 15th, 1990? The answer was, and here's the thing though that we found out, the central banks, for instance, the Central Bank of Iraq maintained, may still, in the form of private accounts, money in several of our U.S. banks, Manny, for instance, the Bank of New York now, just as an example. Now, we're told there's no way we can let you know. Why? The institutions referred to in question number 1 maintain deposit and custodial accounts at the Federal Reserve Bank of New York. Those accounts are used for investment in U.S. government obligations and certain other financial assets. Under the terms and conditions of the agreement governing each account, the Federal Reserve Bank of New York is obligated to maintain the confidentiality of account information. This obligation applies to all correspondent accounts that the Federal Reserve Bank of New York holds on behalf of more than 170 foreign central banks and monetary authorities. The Federal Reserve believes that this obligation should be respected. For our part, we expect foreign central banks that hold assets for U.S. monetary authorities to maintain strict confidentiality with respect to the size and nature of these holdings. Now notice, that hold assets for U.S. monetary authorities. But our system is a system, a much vaunted system, of private banking enterprise. But in every one of these 170 cases of these foreign, most of those banks are foreign government owned and controlled. The Italian government, for instance, has about 75 to 80% ownership of the B&L. So we're not playing on that same ground, on that same field. And this is something that I don't think American awareness. I'm privy, it seems strange for me to say it, to the thinking of some of the most internal considerations of great international banks and all. And their attitude to the United States is, it's a joke. They laugh at us. We're Uncle Sap, not Uncle Sam. So then here we are. We're told, well, if the Central Bank of Iraq, and that might mean Saddam Hussein himself, has a private account in our banking system, we can't get behind it, or we can't let you know, Mr. Congressman. For our part, we expect format. Moreover, the Federal Reserve would be concerned if the Federal Reserve Bank of New York were to violate the terms and conditions of their correspondent relationship. But the correspondent relationship isn't parallel, as I said and repeat, because you're dealing with banking interests, central banking interests that are government operated. The danger, as I see it, as I saw in the B&L, is that we are letting our foreign policy in many ways be impacted and perhaps even determined by the activities, or maybe contradicted by the activities of foreign government-owned banking institutions. I think that's where the national interest, I think, is above all exposed. The other question, regarding financial institutions operating in the United States, please provide a list of banks that transferred money to the Central Bank of Jordan or the Central Bank of Iraq prior to the Iraqi invasion of Kuwait. We asked this last year. Please include the date and dollar amount of such transfers. While the Central Bank of Jordan and the Central Bank of Iraq have accounts in commercial banks in the United States, this is the answer, the Federal Reserve has no knowledge of transactions in such accounts other than in connection with the central bank's account at the Federal Reserve Bank of New York. And I won't read the rest of the reply. I think we had provided it for the committee members, but if we haven't, we'll put it in the record now and include it in your kit that you had here this morning. The reason I'm bringing this up is that I would hope that as we go into this question immediately, and I want to remind my colleagues, those left here, and I have to the greater majority, that when we acted on the banking bill on June the 28th, we said that such things as regulatory reform were not going to be put on the back burner, just merely because we hadn't reached the point of including it in that legislation. And I intend to keep that on the front burner. We're going to be very busy. And hopefully that no matter when we adjourn, whether we adjourn before November or later, that we will continue to work as a committee until the beginning of the next session. And of course, we're in the first session of the 102nd Congress, so we have time. And if we dedicate ourselves, we should succeed. But in the meanwhile, the reason I'm bringing this forth is that I hope collectively you and your colleagues and translated to the board members can give us some recommendations as to how the national interest be protected by at least extracting and making it necessary as a precondition operating in this country that this information be available, and that we in the Congress not necessarily be denied within constraints and proper limits. And with that, let me say that I repeat my gratitude to the staff. The staff has been extraordinarily wonderful. On my right here, we have the man that's been at the forefront of this. But overall, the staff director, Mr. Meek, who's a very self-effacing gentleman, is the one that has made it all possible for me to work out the agenda, because he's the one that has the ability and the talent and the inspiration to orchestrate and carry out. But Mr. Dennis King is the one that has been very much devoted, day and night, for 2 years on these questions. one of our associate counsels is Barbara Shaikoff. Did I pronounce it right? Okay. And of course, we have a gentleman that very generously GAO has allowed us to have, and no, Amado? Oh, well, I had been calling you by the wrong last name. Mr. Aviud Amado, he's from the GAO. And this is a way we've been able to work. If we had depended on our own resources, we wouldn't be able to do half of this. We have Julie Black, of course, and I won't mention some of the others who aren't here at this moment, but Julie Black, who happens to be sitting there in all her glory. And I think Eric, one of the investigative staffers, Eric North, no relation to Colonel North, very young, but it's been an inspiration to me. On the minority side, we've had, Mr. Wiley had to leave because he had to go back to his district to absolute must commitment in Ohio. But his staff director, Tony Cole, is also one that I should want to particularly select as having been not only cooperative, but most helpful in synchronizing the minority and the majority staff's work in harmony. And I noticed Mr. Rick Morano over against the wall. I shouldn't have left him out. I didn't realize he was there until I turned my face. He has worked shoulder to shoulder with Dennis Kane and has been working for this committee for a few years, in fact a couple before I became chairman. So we're very fortunate to have these, and you'll apologize if I don't get all of the full names here of the minority staff, but I do want to thank you profoundly. Gentlemen, you've been most patient. I hope we haven't abused that patience, but you've also been most helpful to this committee. Some of the absent members will be submitting questions in writing that you should receive by the time you get the transcript of these proceedings. You'll be given a copy of the proceedings, as you know, and for your correction and review. And then, if by then you have the questions, you might address them in writing. Thank you, gentlemen, and those of you that have come from the other side of the continent, have a safe trip back home, and thank you for helping us so much. The committee will stand adjourned until further call of the chair.
That concludes our coverage of this congressional hearing on the Bank of Credit and Commerce International. For more information on the proceedings, write to the House Committee on Banking, Finance, and Urban Affairs. The address is 2129 Rayburn Office Building, Washington, D.C. The zip code is 20515. This programming note, Day 1 of the BCCI investigation will re-air in its entirety Saturday beginning at 10 a.m. Eastern Time on our companion network, C-SPAN. That's the re-air of this Banking Committee hearing